All right. Good morning, Warriors. Good morning, Warriors. Great. Okay. Yes, I think tough times, unfortunately. So going through a patch, you are included. I'm also included in this tough patch, unfortunately. While yes, you have probably your results to take care of. I have unfortunately so many in my hand right now. So the pain I'm going through is a little bit more than you, but no justification on that. I know things have been bad for the last couple of days, people, but nevertheless, the fact that you have stood up and you've come up here itself is a big achievement for all of you, right? So that itself is a proud feeling, first of all, because yes, it's not easy to come out of that patch. Failure in life is not an easy thing to take care of. So standing before that and coming up itself is a very big achievement, first of all. I know this is a little too early that we are calling you. Maybe you need some time to recover even now, but yeah, I guess, unfortunately with this 3 attempts and all going on with ICI, it's difficult to give you some space on that. Yes, it's more about keeping you engaging as quick as possible so that you also have enough time to prepare for yourself. So that is why this is happening a little early, but theek hai na. I think at the end of the day, it's all about what you're doing better, right? I know today's class, yeah, you are with a different intention ki mere ko pada de and I go back home and I just start, preparing for your exam. But for me, at least to start with, it's a new thing for you, right? I know you're going through a rough patch. I know things are difficult in life. I know you want to have that sad feeling ki log samjhe and everything. But one small request from my side, today is going to be something you're learning new, right? So I want that same kind of excitement which you all had during your classes, right? I'm going to teach with that same kind of excitement. I want that same kind of excitement from you also. Yes, may kya hoga is a different conversation. We're not getting into that, but at the end of the day, let's be happy about the fact that we're learning something extra. We're learning something new, which probably your friends who have cleared would not know, right? Because they would only be aware about something which has happened in the past. You are at least better in that position that you know something better, right? So today's class is more about a knowledge based class. I will try my level best to go to the granular level of things and give you all examples, all illustrations, everything you can note down, right? So everything of that level will be given to you. So I'll handhold you for today's class, no problems at all. But that small request from my side, that if you show that excitement alone that you're learning something new and better from me, that is itself enough for me to go forward to. Yes, yes. So that one small request I have from your side, people. That is all my request is. Can we do that for today? Let's have that thought in mind, people. Yes. Now I do remember telling you 2 days back to start preparing a little bit, people. I know direct tax as a voluminous subject may not have been done in one day, but I assume that is what you have been doing to your exams also, right? So that is one reason why I wanted to give it at the last minute, so that you also have that push and nick for doing it better, right? So if you have done that preparations, good enough. If you're not done the preparations, no worries. I will give you the basics of what was happening in the past and then take it from there, right? So that is what we'll be doing for today's class. Some equipments which I asked you to carry, people, I want you to have it in your hand right away as we speak. Two things which is important for you to start this batch itself. You need two highlighters, right? One highlighter which I'm going to use for all your important things, and the second highlighter like we did last time when you did the batch itself. This is all about talking your default tax regime. Yes, so the second highlighter will be all about specific to default tax regime. The first highlighter will be more important related things. Yes, so every time I tell you this is important, you will mark it as important highlighter, and every time I tell it's a default tax regime, you'll start marking it then and there, right? Because it's a new book, people, you'll have to kind of copy paste the whole thing which you had in the old book, right? So that thing is what I'm going to do in today's class as well with you, so that you don't have to go and do it back once again at your home, right? So that is what we're doing. So two highlighters on your table, people, right away, and then you will have your workbook along with you in which you're going to start solving sums with me. Yes, so what I'll do is I will give you some illustrations. You're going to note down that illustrations. If it's a big illustration, you'll do it in your workbook. If it's a very small illustration where you just need to know a few things, you will take it in your post-it and stick it in your concept guide. Yes, so at appropriate stages I will tell you, people, whether you need a post-it or you need a workbook illustration. But no matter what you do, whether you write it in your workbook or you do it in your post-it, everything goes into concept guide. Yes, the book which you're having for solving sums is not for the purpose of exams. You don't use that for your exams. Yes, because you will lose track of it, you will not know where it is. So every time you write a sum with me, even though you have it in your preparation book, you will tear it off and you will put it back in your concept guides. Yes, because everything which I'm going to give you today is extremely important. Everything is an amendment and it has critical issues which has to be focused upon, right? So everything gets transferred to your concept guide at appropriate stages. If it's posted, you can do it today itself. If it's a worksheet, you will take it back home and then you will change it to your books. Is that clear, everyone? Yes, 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 yes. Great. On that understanding, people, we are starting with this. As you all would be aware, you're moving from Jan 25 to May 25. Yes, and every time you move from May, you get a new amendment. We have not much, but a good set of amendments which are important from exam perspective. So that's what we're going to focus on, people. We're going to go chapter wise, and I'm going to tell you what amendments you have. First, I'll explain the amendment with the background, and then I'll give you some illustrations so that you can note down those things. Is that clear? Yes, we're going to go with that understanding, people. I think you would fairly be comfortable with what the concept guide looks like. The syllabus is not changed as such, which means the chapters remain the same. We're going to have the same set of chapters as you had earlier with some changes, right? For those who have used the Jan 25 concept guide would be aware that Jan amendments were in green. As you're moving to May 25, those would have all changed to black and reds. Now you will have new set of greens. So we're going to discuss all those new greens. Yes. So that is what the chapter is, people. Now on a high level itself, if I have to clarify to you the chapters which have amendments, first you will have an amendment in your capital gains. The critical amendments are happening in capital gains. The whole chapter itself is unfortunately kind of changed, right? So we'll be having a good amount of discussion with me on capital gains. Second is your business reorganization and your distribution of incomes. Basically, the whole set of capital gains is amended. Then you have some amendments in rates of taxes, people, specifically to your special rates. Like all your capital gains. Tax rates of capital gains have undergone an amendment, so that would be part of special tax rates to be discussed also about. Yes. After that, people, what other amendments do you have? You directly then have a small amendment in chapter 6A. A couple of amendments in TDS and TCS, people. You and I both know we're not doing it. Yes, so I'll teach you what the amendments are, but we will this time tell you what to remember from exam perspective, right? Rather than going through all the sections, people, which you have anyway not gone through, I will take you through those sections which I want you to pay attention to. Yes, so that alone, if you read from an exam perspective, again, I cannot guarantee you that will come, but safety measure. Yes, this is the maximum which can be tested, so that is what we are going to be looking into. After that, people, you will have some amendments in your this chapter which is called as default tax regime. These are the chapters we are going to focus on today's class. Yes, these are all chapters where you'll see important amendments, which is what we are going to discuss. Are you clear? Are we good to go? Yes. On that note, people, we're starting with the first thing. Now, nothing to be discussed from a rates of tax and a basics of income tax, people. Just the one thing which you need to keep in mind, and this is something which I've told you when we start the batch itself, that for your exams of Jan 25, you were discussing assessment year 24-25. You were discussing assessment year 24-25 because it was enumerating from something called as Finance Act number 2020. Very good. It was coming from Finance Act number 2023. Yes. Now that you're shifting your syllabus, we are now in May 25 having something called as assessment year 25-26 with Finance Act coming in as 2024. Super. This is what you need to know first of all, people. Yes. So for your exams, when you come to May 25, all years will now extra add one more. So it will not be 31st March 24. It will now be 31st March 20. The logic remains the same. The year alone is changing. So you're going to look at Finance Act number 2024. Yes. Now, I don't know how many of you are aware, people, but we discussed it when we did classes also, that every time there is an election year, it's not just one Finance Act which comes, it is two Finance Acts which come. So therefore, there is not just Finance Act 2024, people. There is Finance number 2 Act 2024. So for your syllabus, you'll actually be reading two acts this time. But here's the good news. There is no amendments in first one. All amendments are in number 2 only, which means technically you're reading only one. You're not reading anything else. So that's the good news for you. You only have to read one, but yes, on a paper you actually have two Finance Acts coming into picture. Yes or no? Yes. So going forward, people, every time we discuss something, I'm always going to come and tell you that your previous year is going to be very good. Your previous year is going to be 2024-25, and then you will have assessment year of 25-26. That is what we're going to be looking into, people. So starting now, you are going to forget everything you've discussed in the past, and you're going to talk about previous years 24-25 and assessment years 25-26. Is that clear till here, people? Yes. That is all you need to know from a basics perspective, people. Nothing else is changing in your basics of income tax. Yes. So everything else we discussed remains the same. The one thing which you'll see here is your amendments are coming, Finance Act number 24 and Finance number 2 Act 24. Yes. Don't mark this, people. It is not important. This is all theoretical. This is more for your understanding. Are we clear till here? Yes, yes. We're moving on forward, people, from basics of income tax to your chapter number 2, which is your rates of taxes. Yes, quickly summarizing what we remember in rates of taxes, people. You have two regimes: default tax regime, alternate tax regime. Alternate tax regime has some tax rates: 0 to 2.5 lakhs exempt, 2.5 lakhs to 5 lakhs, 5%, 5 lakhs to 10 lakhs, 20%. After that, it becomes 30%. But if you're a senior citizen, it becomes 0 to 3 lakhs. If you're a super senior citizen, it becomes 0 to 5 lakhs. No changes in the rates. No changes in the rates. The rates remains the same. After that, the rebate also remains the same. The rebate also remains the same. You get rebate of 12,500, wherein total income is up to 5 lakhs, where total income is up to 5 lakhs. But you don't get this rebate when you are having long-term capital gains under section, very good, under section 112A. That is what you have when it comes to rebate. And then you have some rules of surcharge, people, where it is 0 to 50 lakhs, no surcharge. 50 lakhs to 1 crore. 50 lakhs to 1 crore is 10%. 1 crore to 2 crore becomes 15%. After 2 crores to 5 crores, it becomes 25. And after 5 crores, it becomes 37%. It becomes 37%. For those who have not gone through the syllabus, people, it's okay, use your books, but please repeat after me. It will be helpful for you also. Yes, this is what you discussed in your alternate tax regime, people. And then we went into something called as special incomes. Special incomes, incomes like winnings, which are taxable at 30%. Then you have online winnings, which are taxable at 30%. And then you have unexplained income, which are taxable at 60 plus 25 plus 4, effectively becoming 78%. This is what you remember. This is what you remember. What we are now changing is what is called as capital gains. What we are changing is what is called as capital gains. Yes, yes, yes. For those who remember your capital gains, people, we have how many sections? We have section 112A. Very good. Section 112. We have section 111A. These are all the sections which you have. And then you have short-term others, which is not special. So therefore, we are letting it go. We are letting it go. People, 112 is long-term, short-term. Long-term capital gains. 112 is long-term capital gains. 111. Very good. This is short-term capital gains. Yes. You are going to tell me what rates you remember. What rates you remember? I remember 112A is taxable at a rate of. Very good. It is taxable at a rate of 10%. 112 is taxable at a rate of 20%, and 111A becomes taxable at a rate of 15%. This is what happened, people. This is what happened. Yes or no? Yes. Now, people, when Finance Act number 2 was introduced, Nirmala ma'am came and said, these rates looks little high. These rates look little high. Let's reduce it down. Let's reduce it down. Unfortunately, what happened? Finance Act number 2 did not come on 1st April. It came middle of the year. And therefore the changes of rates only happened from middle of the year. Income tax said whatever rates you remember will be up to 22nd July 2024. Will be up to 22nd July 2024. Unfortunately for May attempt, people, you will have multiple dates coming in. You'll have to remember things with dates also. No worries, we'll do sums. You'll understand better. Yes, but income tax is coming and saying whatever rates you remember will only be applying up to 22nd July. From 23rd July comes in new rates, people. From 23rd July comes in new rates, where income tax said, you know what, we are confusing ourselves with two different rates for long term. Let's have one common rate. Anyone? 12.5% was the new rate introduced. 12.5% was the new rate introduced for both 112A and 111A. Which means technically, if you notice, people, 112 has increased. No, 112 has decreased. 112A has increased. Don't nod, people. Listen. Yes, 112A is increasing. 112 has decreased. So benefit has come to me only in 112. So your normal long-term capital gains now have a lower tax rate. As compared to that, people, short-term was also increased from 15 to 20%. These are your new rates. So what are the new rates, people? If you are into 112A, your rates becomes 12.5. 112 becomes 12.5, whereas short term becomes 20%. Short term becomes 20%. That is what was understood. That is what was understood. Yes or no? Yes or no? Yes or no? But people, for those who remember, 112A had a limit. They said up to 1 lakh no tax. After 1 lakh only you will have tax. Up to 1 lakh you will have tax. Now here is where Nirmala ma'am came and said, I'm increasing the rate, so I should also increase the limit. Income tax said, here the limit has now increased to 1.25 lakhs. It has increased to 1.25 lakhs. In simple words, income tax is saying for the first 1.25 lakhs no tax. After 1.25 lakhs you will have a tax. You will have a tax. Now here comes the question. This 1.25 lakhs is applicable after 23rd July, before 23rd July, or both? It is for both. It is for both, meaning this year you no more have a limit of 1 lakh. The limit standardly has become 1.25 lakhs. The limit standardly has become 1.25 lakhs, which means people, in exam when you get a long term capital gains, in exam if you get a long term capital gains, whether it is before or after, it doesn't matter. For the first 1.25 lakhs you'll give 0. You'll give 0. Whatever is after 1.25 lakhs, you then will decide whether it is before 23rd July or after 23rd July. Before 23rd becomes, after 23rd becomes. That is what happens. That is what happens. Clear? Yes, yes. I'm repeating myself once again, people. When it comes to 112A, income tax said from the current year there is only one limit of 1.25 lakhs. For the first 1.25 lakhs, no tax. No tax. After that, you decide whether the long term is before 23rd July or after 23rd July. Before 23rd July becomes 10%, and after 23rd July becomes 12.5%. These are your amended tax rates. These are your amended tax rates. Is that clear, everyone? Yes, yes. Just to make it comfortable, people, illustration question. I am coming and telling you there is a person called CA Moksha. Yes, who has earned the following incomes. For people, note down, note down, note down, note down. Assessment year 25-26. You have the following incomes for assessment year 25-26. Yes, I am coming and telling you that the long term capital gains under section 112A, under section 112A, which is earned on, let's say, 6th April 2024, earned on 6th April 2024. People, the moment you saw 6th April, this is, therefore I am telling you the income here earned is 2 lakh rupees. The income earned here is 2 lakh rupees. On the contrary, I also have long term capital gains under section 112A, which is earned on, let's say, 10th November 2024. 10th November 2024, assuming another 4 lakh rupees. Assuming another 4 lakh rupees. This is what the question says. This is what the question says. Yes, 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 yes. I am asking you to go and compute my tax under ATR. I want you to compute my tax under ATR. People, every time we discuss questions like these, the first thing I told you is always total. Always first total. Number becomes, the moment I know the number is 6 lakhs, I am not in rebate. I am not in rebate. I'm a normal person. I'm a normal person. This is the first thing to know, people, because the moment you have rebate, first stop and tell yourself there is a rebate coming in. There is a rebate coming in. Yes or no? So the first thing I'm telling people, I'm at 6 lakhs and therefore no rebate. And therefore no rebate. Luckily in this question everything is 112A, so rebate was anyway not there. But still, you always need to check your total and come and tell what is your income. With my income becoming 6 lakh, people, am I eligible for rebate? No, not eligible for rebate. At this point of time, I need to start computing my taxes. I need to start computing my taxes. My first step, minus, no, you are always in these kind of questions supposed to first do no, same mistake every time, people. When you have no basic exemption limit used, you get something called Kaju Katli. You get something called Kaju Katli. You first exhaust your basic exemption limit. Correct. Yes. So first always exhaust your basic exemption limit, people. You can't miss that step. Not allowed. Not allowed. You have to know that step. Always to be kept in mind. First exhaust your basic exemption limit. Now comes the critical question. I have two incomes. Which one do I use? I will use because very good. You have a tax at higher rates. So therefore, I will first decide that in that 6 lakhs, in this I will exhausting how much? 2,50,000. I am exhausting 2,50,000 so that my basic exemption limit gets utilized. My basic exemption limit gets utilized. I get an income of 1,50,000 and now I get an income of 2 lakhs. Now I get an income of 2 lakhs. Now these are my taxable incomes. These are my taxable incomes. The first 2 lakhs is taxable at 12.5%. But here comes the question. Now I need to give 1.25 lakhs. I need to give 1.25 lakhs. People, I will give it for, I'll give it from, by, very good. People, nowhere in income tax have they told that 1.25 lakhs in FIFO basis. They simply said 1.25 lakhs. They simply said 1.25 lakhs, and you and I have both discussed, when you don't know what to do whatever is very good, do whatever is beneficial to the assessee. So I am now deciding that in that 2 lakhs and 1.5 lakhs, I am also now excluding 1,25,000, giving me a final number of 25,000 for after 23rd July and 2 lakhs for before 23rd July. These are my taxable incomes. Nothing left on this. Directly compute tax for the 2 lakhs at the rate of 10%, number becomes 20,000. For the 25,000 at the rate of 12.5%, number becomes totaling, add, number becomes 24,050. Yes, yes, yes. Everyone is clear. Yes, note down quickly. Note down quickly. Yes, always remember the fact that people, if your basic exemption limit is not utilized, there is coming in Kaju Katli. There is coming in Kaju Katli. You can't let this go now. You can't let this go now. You need to keep this as marked important. Yes, yes, yes. The rule is very simple, people. Because you have a 1.25 lakh limit, you have to decide where this 1.25 lakhs gets exhausted. Not given anywhere, you can always assume it is done from the higher of the taxes. It is done from the higher of the taxes. Yes, yes, yes. Move forward. Move forward. Done. People, like I said earlier, it is not about you noting this down. It is about you making sure that you understand this carefully, marking those things which are missing out, and so that you don't make this mistake once again during your exams. Yes, so things like Kaju Katli, things like using wherever it's better, always make sure that you highlight this properly, you make some notes, you put some markings on it so that you are comfortable when you read it for your exams. During exams, it should not flash you back once again as to what have we talked about. Yes, don't do that mistake. Clear? Are we good to go? Yes, yes. Moving on forward, people. Let's try one full-fledged question so that we understand that you have done it better. Yes, we have CA Krishi. Let's say age 26, earning the following incomes. I'm giving you some facts, people. I'm telling you there is a PGBP of, let's say, 3 lakhs. There is a PGBP of, let's say, 3 lakhs. I am having a short-term capital gains under section 111A. Let's say another 8 lakhs. I'm giving you short-term capital gains under section 111A of, let's say, 2.3 lakhs. Now, people, if a question like this comes in exam, for this year alone, you'll have a confusion, because you need to first know whether it is before or after. Assuming in exam you don't get a date itself, people, always assume it is after, because that is what the new laws are. Yes, so if you don't get a date, it's always after, unless and until it is not given. But what I've been noticing from ICI books, people, is that this year you have a bonus. This year you have a bonus. Rather than giving you the dates, ICI is directly giving you the rate itself. ICI is directly giving you the rate itself, meaning they will not even give you the rate. They'll summa come and say STCG under 1 money at the rate of 15% and STCG under 1 money at the rate of 20%. So they're still coming and telling this is the number, put the number and go. Put the number and go. That is what I'm seeing from ICI study material. We don't know what will happen in exams, but this may happen. This may happen for your purposes, people, because I don't want you to know it easier. I'm giving you dates. Let's say this is 10th March 25 and this is 4th May 24. This is 4th May 24. Yes. Then I'm coming and telling you, people, you have LTCG under section 112 of let's say 6 lakhs. This is happening on 9th September 24. 9th September 24. And then we have LTCG under section 112A of let's say 9.8 lakhs. 9.8 lakhs, which is happening on let's say 6th May 24. Let's say 6th May 24. This is the facts of pattern, people. This is the facts of pattern. You have been requested to compute. You have been requested to compute tax. Yes, always, people. Step 1, number 29 lakh 10,000 is my total income. With my total income being 29 lakh 10,000, I know no and no surcharge, no rebate, no surcharge. I'm a clean case. With this facts, you are good enough to go find taxes. Compute tax under DTR. People, at least now get smarter. Compute tax under DTR. No, not for this question. There are changes, but not for this question. Don't worry. Go for it. What you remember is right. Give it a shot, people. It's okay. You may go wrong, but that's what you learn. Yes, people, rules to follow like we discussed earlier. Step number 1, always total. Step number 2 comes and tells you whether you are rebate or surcharge. Step number 3, once you have concluded it, always first check for Kaju Katli. Always first check for Kaju Katli. Never let that go. Luckily in this question, my default is 3 lakhs, which is fully exhausted with my slab. So therefore, no problems. So Kaju Katli also satisfied. Step number 4 becomes split them into incomes of normal and special. Looking at the question, people, PGBP is normal. Tell me the tax rates quickly. 11 money 10th March 20%. 11 money 4th May. 112 9th September 12.5%, and 112A 6th May becomes 10% in excess of 1.25 lakhs. Very good. This is your taxes. With my normal coming to understanding, people, my normal becomes 3 lakhs. Default tax regime slab is 3 lakhs. Matter is over, which means PGBP becomes 0. I only have my special incomes now. Help me out quickly. I have 1 8 lakh into 20% becomes 1,60,000. My 1 2 lakh 30 into 15% becomes 20. 34,500. Then we have 112 75,000 under 112A, people. First remove 1.25 lakhs and then give me 10%. 85,500 totaling to a tax of 3,55,000, totaling to a tax of 3,55,000. Adding on this is an health and education cess at the rate of 4%, giving me 14,200, totaling the number 2. This is my final tax payable. Add what? Can you do that? 6 lakh is what? 1.25 lakh is only given for. Don't make that mistake. Yes, yes, yes. This is your final tax payable, people. We get 3,69,200. 3,69,200. Yes, yes, yes. For your reference, people, on your concept guide, create a post-it quickly. Create a post-it quickly where we'll come and say steps to compute taxes. In your concept guide, chapter number 2, rates of tax, first page, we're going to put a post-it. We're going to put a post-it. The post-it will say steps to compute tax. Steps to compute tax. मेगा बुक में लिख ले. It'll take time. Steps to compute tax. Step number 1, people. How do you compute tax? Step number 1, total the income. Step number 1, total the income. Total the income. Step number 2, identify क्या? Rebate, comma, surcharge, comma, marginal relief, comma, marginal rebate, comma, marginal rebate. Yes, sir. Yes, sir. Step number 3. Step number 3. Split incomes into. Split incomes into normal and special. Split incomes into normal and special. Step number 4. Always check for Kaju Katli. Always check for Kaju Katli only for residents. Always check for Kaju Katli only for residents. Only for residents. Clear? Clear? Step number 5. Step number 5. Step number 5. No rebate on 112A. No rebate on 112A, comma, surcharge maximum at 15%. Surcharge maximum at 15% on very good, capital gains and dividends. On capital gains and dividends. Capital gains and dividends. Step number 6. बताओ. Round off. To round off to nearest 10. Step number 6, round off to nearest 10. People, ये सब तुम्हें पता है. Everything is what you know, but it just gets missed out. It just gets missed out. No worries. This time this step will help you do better next time. Yes. So when we give questions, you will follow the same sequence, people. Follow the same sequence. 101% the answer will come correct only. Yes. Please follow the sequence. It will help you properly. Yes. This is your chapter number 2, which talks about your rates of taxes. Any doubts on chapter number 2, people? No. Where will you find it in your chapter number 2, people? The last page of this chapter. The last page of the chapter where you see some greens. Where you see some greens. You'll see on the left side before 23rd July, you'll have tax of 10, 15 and 20. After 23rd July, it becomes 12.5, 12.5 and 20. 12.5, 12.5 and 20. Please note in mind that there is no more 1 lakh. There is directly 1.25 lakhs. There is directly 1.25 lakhs. That is what the understanding is. That is what the understanding is. Clear enough to go? Yes. Anything else which is there in this chapter, not important, people, but then small reference, people, which you need to know. One small reference which you need to know. Company tax rates have undergone a bit of a change. Until last year, if you remember, people, companies, domestic companies had 25 and 30. 25 and 30. For checking 25, I told you in the class itself, you will not check current year, you will not check previous year, you will check previous year, you will check previous year, meaning you were in previous year 23 24, for which you were checking 21 22, previous year, so you are checking 21 22. Now that you are shifting one more year, you are in PY 24 25, so you are not checking 24 25, you are not checking 23 24, you are checking. Therefore, the amendment says your previous year 22 23 should be less than or equal to 400 crores for you to have a domestic tax rate of 25%. 25%. Yes, yes. Apart from that, people, foreign company till your syllabus was 40 has now been reduced to 35%. Has now been reduced to 35%. This may come as an MCQ question. So focus on the MCQ part of it. Focus on the MCQ part of it. The foreign company alone, pay attention to it, people. Foreign company is at the rate of 35%. Foreign company is at the rate of 35%. Clear? 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 Yes, yes, yes. We are moving on forward, people, to what we call as residential status. No amendments in residential status, but here's one good news for you, people. When you come to residential status, you will have a section number 9. You will have a section number 9 which talks about business connection. Yes, in section number 9 you will have something called business connection. People, check page number 19. Page number 19, you have business connection. There is this whole one big para about agency, people. Yes, if you are an agent, you will have a business connection for so and so reasons. All those have been scrapped from the syllabus. They have been scrapped from the syllabus. You can strike it off. You can strike it off. Please pay attention, people. How do you strike it off? In section number 9, these 3 lines will be there in your book. These 3 lines will be there in your book. After that, you will have a full agency topic. Strike off the agency topic. Strike off the agency topic. After that, people, next page you will have something called significant economic presence. Strike it off. Yes, significant economic presence is also striked off. After that, people, you will have something called incomes where business connection is not established. Yes, cases where income will not be deemed to accrue or arise in India, that topic alone is remaining. That topic alone is remaining, which means, people, in your page number 16, 19, in page number 19, on the top, you will see something called income of a non-resident, agency model, the whole agency piece. Yes, strike off the whole agency piece. Strike off the whole agency piece. You keep it till here, people. ये तक तुम्हारे book में है. इसके बाद whatever you have, strike it off. Yes, you will see this blue color line, people, which says through or from any business connection. After that, whatever you see, strike it off. Strike it off. Move to the next page. The first thing says significant economic presence. Strike that off. Strike that off. Keep it only to the part where it says income shall not be deemed to accrue or arise in India. In simple words, for your exams from section 9, PGBP part, you only need to read one thing: cases where business connection is not applicable, which is only this 5 items. Which is only this 5 items. Nothing else is there. Nothing else is there. You can scrap everything else off. You can scrap everything else off. Yes, 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 yes. Not an amendment for you, people, but an amendment from ICI perspective. From ICI perspective, they shifted it to finals. You will discuss this in finals when you come to back. Yes, yes. Moving on forward from chapter number 2, people, we are going into chapter number 3, talking about salaries. Talking about salaries. No changes in salaries, people, except for one thing, which we come to the very last. Which you come to the very last, people. You will find it. Hey, by the way, just in case you're not aware, RFA for your syllabus had an issue. You had something not there anymore. Only one after, which is, that's all. Yes, you only have RFA for after now, people. That last year what was extra is not there now. Is not there now, which means RFA is only one rule. If it is owned, then it is 10% of salary. If it is hired, then it is higher charge with 10% of salary, whichever is lower. Whichever is lower, that is what is there, people. Nothing else is there. Yes, so that before and after has been scrapped off. You don't need to read that. Yes, moving on forward, people, to the last of this chapter, we are looking at what is called as standard deductions. We're looking at what is called as standard deductions. Now, last year there was an amendment in default tax regime which said standard deduction is applicable. This year amendment comes and says standard deduction is enhanced. Standard deduction is enhanced, meaning if you are under alternate regime, you will get a standard deduction of 50,000. If you are under alternate regime, you will get a standard deduction of 50,000. But if you go for default regime, you now get a 75,000 ka deduction. You now get a 75,000 ka deduction. There is an increase now. There is an increase now, standard deduction. You'll see it in your book, people. Take your important highlighter and mark this thing. Take your important highlighter and mark this thing where it comes and says if you are under alternate regime, you are at 50,000, but if it's your default regime, you get a standard deduction of 75,000. You get a standard deduction of 75,000. Yes, yes, yes. Darshan, you need to get a book. You have to get a book. Yes, yes. So you need to keep in mind, people, that when it comes to salaries, now you have now a little bit of a complexity. You have a little bit of a complexity. If you're under alternate regime, you get a standard deduction of 50,000, but if you're in the default regime, you get 75,000. If I have to give you a question on this, people, just to confuse you a little bit, let's see if you're able to answer this question. Yes, the question is as follows. The question is as follows. It says, where illustration number? People are keeping track. So the question says, CA Himanshu has informed you of the following incomes. As per DTR has reported you the following incomes of DTR. Total income as per DTR is rupees 30 lakhs. Total income as per DTR is rupees 30 lakhs, which includes salary of rupees 9.8 lakhs and HP loss set off from SOP of rupees 2 lakhs compute total income as per ATR. Compute total income as per ATR. This is what the question says. Yes, yes. Questions like these can be tested in the current year, people. A little bit of a complex question, but if you pay attention to it, you'll get it better. You'll get it better. Before you start, first try to figure out what is happening. Try to figure out what is happening. Yes, take a second, look at the question very quickly. Take a second and look at the question very quickly. What is the question coming and saying? The person has reported a total income. Total income. How much has he reported? So I am putting on the bottom, I have a total income of 30 lakhs. Yes, in this, some components are given to you, some components are not given to you. Some components given to you and some components not given to you. So let's figure out what components are given first. What have I been given? I have been given a salary, 9,80,000. Then I have been informed that I have also claimed a HP loss, which means it's a plus or a minus. It's a plus or a minus. It's a minus. So I'm putting it as minus 2 lakhs. I'm putting it as minus 2 lakhs. Anything else given to you? No. People total this number, how much has come? 7,80,000. So what I know is 7,80,000. What I don't know is 22 lakhs, 20,000. So I will, assuming nothing is there, just randomly putting it as PGBP. Number is, yes, sometimes this takes time, people. I know this takes time to figure out the data, but it's important because then you understand things better. Yes, now I've told you what my income statement is. Now the problem is, this is as per DTR. I need to move to ATR. Notice very carefully, first item in DTR is salaries. I am under DTR. If I have reported a salary, I would have reported after claiming. Very good. I would have reported after claiming a 75,000 ka deduction. Whereas if I am under ATR, I should have claimed only 50, which means I have claimed extra. I have to. Very good. I get. Yes, sir. Yes, sir. Yes, sir. Yes, sir. Same lines, people. I have a HP loss, but the loss is from SOP. I am under DTR. Did you first claim it? Yes, which is wrong. Should have not claimed. Correct? No. Yes. Which means, people, first of all, this number itself is wrong. This number should have been. Correct. No. Yes, which means technically this is wrong, people. This is wrong. It should have been 32 lakhs. Yes, but ignoring that fact, I am under ATR now. Under ATR, can you claim? Yes, so I am claiming under ATR 2 lakhs. I am also having a PGBP. No change in PGBP. Remains the same. Therefore, getting me therefore getting me 30 lakh 25,000. Yes. Sorry. I didn't know anything. Yes, yes, people, you can get questions in wrong terms also from exam. There is always a possibility where ICA itself will tell you there is a wrong adjustment. Does not mean you don't look into it. Yes, which is why people, these kind of questions is always better to break it down. Yes, keep it as simple as possible for you. It becomes easier for you to understand. It becomes easier for you to understand. That's for what I've done, people. I have first come and told yes what has been done. Then I try to understand what should have been done, and then I try to rectify my mistake. Yes, which means if I have to conclude my answer, people, my actual total income as per DTR is 32 lakhs, whereas my total income as per ATR is 30 lakh 25,000. 30 lakh 25,000. This is how it gets reported, people. Yes, expect questions like this in MCQ format. Expect question like this in MCQ format, where ICA may give you a question where ICA may come and say total income of this person as per ATR is so much. Compute the tax as per DTR. Compute the tax as per DTR. People, if you are moving from DTR to ATR, you have claimed more deduction in salaries. Therefore, you will add back. If you are moving from ATR to DTR, you have claimed less deduction in salaries. You will claim more. That is how it will operate, people. That is how it will operate. Yes or no? Yes. Expect questions like these, people. These are very famous questions in the current year syllabus. Yes. While ICA has not put it in the study material, I'm pretty sure when the case study booklet comes out, this will be one of the questions. Yes. So pay attention to this part also. Yes. The best and the easiest way to do these kind of questions, don't jump your gun. First, break down and try to understand what happened, and then make adjustments. In the hurry that you try to find out answers, you may make mistakes. And you know how MCQ format works. Yes, one small mistake from your side, the wrong option is definitely there in the question. Yes, so you don't want that to happen. Yes, so break down and then do proper analysis. You will get a better answer. Is that clear? Yes, this is your change when it comes to salaries. Only under DTR. No changes in ATR. Is that clear? Are we good to go? Yes, this is your amendment when it comes to salaries, people. We're moving on forward to the other amendments. We are into HP. There is only one small adjustment for you, more from an MCQ perspective. I think when I was discussing this in the class with you in Jan, people, yes, I had told you that when it comes to HP, the rule is very simple. If you have a house and you lease out the house, it becomes income from HP. But if I come and tell my business itself is to let out houses, then I say it is PGBP. Yes, because I told you that time, people, Supreme Court had passed a judgment. Where Supreme Court came and said if you are leasing out houses, then you are in the business of leasing out houses, and therefore it becomes PGBP. Because Supreme Court touched the ego, Nirmala ma'am came and said amendment. The amendment now comes and clarifies, even if you are in the business of letting out houses, it is still under HP, not under PGBP, provided the houses are residential houses. Meaning if you are a person who's leasing out complexes, malls and everything, you are still PGBP. But if you are now going to start leasing out houses, then it is HP. The only problem is, people, they have not notified what do you mean by residential units. It just says residential unit, but they have not told what is residential unit. Do you have to live in the house for it to be residential? I don't know, right? But as such, from an exam perspective, if it is residential, it is always HP. That is what the understanding is. Yes or no? Yes. So a small post out for you to understand, people. What is the post out coming and saying? A small post out for you. First question I'll ask you, whether it is my business or not. So if you say it is not my business, it is not my business, then I will only be letting out what kind of things, people? I'll only be letting out residential related things. I'll only be letting out residential related things. Income reported under HP. Income is reported under HP. Agreed, not agreed? Agreed, not agreed? But if I say I am in the business, I am in the business, my question will be to you, tell me what are you letting out? If you tell me it is, I will tell you this is, very good, this is the amendment of current year. This will become HP. This will become HP. On the contrary, if you tell me this is my business, but I am letting out commercial properties, I will move to PGBP. I will move to PGBP. So only amendment in the middle part. More of a clarification thing, people. I don't expect this to be tested in exam, but nevertheless, just to be safer. Just to be safer. Clear enough? Yes, 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 yes. This is the amendment of HP chapter. Are we clean to go? Are we clean to go? Can we move forward? Yes, yes, yes. We are then proceeding in forward, people, to the other things. We are not looking at HP anymore. HP provisions remain the same. No changes in HP provisions. Maybe your years will change. That's all is the change which will happen in HP. PGBP, luckily this year there will be one very small change which we'll be discussing subsequently when we do chapter 6A, people. But other than that, PGBP has no changes. You can straightforward move. Yes, there is one small change which I was talking about, people. It is in page number 63. It is in page number 63 of your books. You will see one very small change, which is what we will discuss. Right now, we will not discuss it. We will discuss it when we do chapter 6A. Yes, so I am holding this back. I am holding this back. Don't discuss this with me right now. Yes, after 61, one small change which we have kind of already discussed when we did Jan also, people. This is more of a clarification. More of a clarification. Let me give you a background. If you remember section 37, which talks about general deductions, where I come and tell you if an item is not notified earlier, you will ask certain questions. Tell me whether it is capital or revenue. Tell me whether it is for business or not for business. And third thing I will tell you, tell me whether it is a penalty payment. Tell me whether it's a penalty payment. Last year itself we discussed, people. We had brought in something called as compounding. Where we told if you are going to pay any compounding fees, it is disallowed. It is disallowed because that is also like penalty. The problem what happened, people, is because income tax very specifically used the word compounding alone. Everything else which was something like compounding but not compounding was assumed to be allowed. To clarify that, they have just put in an amendment which says any expenditure which is incurred to settle proceedings. Settling proceedings is nothing but compounding only. But just to clarify, they have put in an extra line which says if you are settling any proceedings, that is also not allowed. So if you see an exam question, people, the exam question comes and says that I am in a business, and in that business there was some fraud which happened. Which because of which court has decided to put me in jail. I went to the court and pleaded to the court and came and said, sir, please don't put me in jail. First and last time I made a mistake. So court came and said, because this is your first time and you're promising this is your last time, I will ask you to pay a fine and let go. People, this fine is not compounding but is for settling a prosecution and therefore is still disallowed as an expense. More of a clarification, people. Nothing complicated about this part. Yes. Great. Moving on forward from PGBP, people, to balance topics. There is one small amendment here. You are in page number 73. We're looking at taxation of firms. People, if you can quickly tell me what was the previous limits. When it came to firm, people, income tax told you there are three kinds of payments you can make to a partner. Interest, salary remuneration एक ही होता है. Share of profits. You can make share of profits. Share of profits is fully exempt. Interest is allowed up to 12%. Last year, Variko, income tax said if you want to pay salaries, you need to compute something called book profits. Where last year it was for the first 1.5 lakhs, you were allowed 90% of the book profit, or this was ulta. For the first 3 lakhs, it is 90% of the book profit or 1,50,000, whichever is higher. For the balance, it was 60% book profits. Very good. Very good. That is what the answer was. That is what the answer was. Nothing they did. They said in the current year, wherever you see numbers, double it off. Wherever you see the number, double it off, which means the number became, for the first 6 lakhs, it is 90% of the book profit, or whichever is balance becomes 60% of book profit. That's a small change. That's a small change. That's all the change, people, because they were saying, boss, salary is looking very less. Salary is looking very less. We are only paying 1.5 lakhs for all partners. Let's pay 3 lakhs to all partners. So one small change in the salary component. One small change in the salary component. Expect this question more in MCQ format. Yes, that is what is an amendment of the current year. Amendments of the current year. I think apart from that, PGBP should remain clean. Yes, done with PGBP. Done with PGBP. Yes, 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 yes. I'm holding back on capital gains, people. We'll do capital gains in a while. We'll do capital gains in a while. Let's move on to other chapters. Let's see what are the other topics to be discussed about. Yes, after capital gains. Yes, all the 3 chapters of capital gains are holded back. We are moving to IFOS. We are moving to IFOS. Now, for those who remember your IFOS chapter, people, chapter has luckily come down. Chapter has luckily come down. For those who remember your IFOS, people, we discussed in IFOS, there are 3 components I asked you to remember from exam perspective. First was gifts. Second was ULIPs. LIPs, not ULIPs, LIPs. And third thing was something called premium on issue of shares. Premium on issue of shares, where I came and told you if you're going to issue shares at a premium to someone, then whatever is the excess you will get taxed. Income tax has scrapped the premium part. Income tax has scrapped the premium part. It is not part of syllabus itself now. It is not part of syllabus itself now. Therefore, you will not see it in the books. You will not see it in the books. It is not there in the books itself, people, because it is not there anymore. Yes. So income tax has now come and clarified. If you issue shares at premium also, no problem, no tax. No problem, no tax. That is what the rule is. That is what the rule is. It is not there in the book anywhere, people, so you will not remember it. But for those who remember your Jan, you will see that extra topic which you have to ignore off. Which you have to ignore off. You don't have it as a syllabus now. Yes, yes. So that is all there, people. Other than that, IFOS remains clean. The only thing which is to be small changed here, people, when it comes to IFOS, there is something called family pension. There is something called family pension. Until last year, people, family pension would get 1/3 or 15,000, whichever is, for both the regimes. For both the regimes. For default regime, current year has made a small amendment. You will now get an enhanced 25,000 if you're opting for default regime. If you're opting for default regime, only if you're going for default regime, family pension becomes 25,000. This is a question which can never be tested in your compulsory format. This is a question which will only get tested in MCQ format, and this question came in May. This question came in May 2024, where they asked you a family pension related question. Nothing, just take the number, multiply by 1/3 or 15 in case alternate, 25 in case check whichever is lower. Check whichever is lower. That becomes your exemption amount. Balance becomes taxable. Balance becomes taxable. Clear? Yes. Good to go. Good to go. Yes. After IFOS, people, we are moving on to the balance topics. We have dividends. No changes in dividends. Dividends remain the same. Dividends remain the same. After dividends, you have clubbing. Clubbing and all is never changing in life. Yes, clubbing remains the same. You have set-offs. Set-offs also remain the same. Set-offs also remain the same. After that, you have chapter 6A deductions. Yes, in chapter 6A deduction comes the amendment which I was discussing about, people. We are under something called as NPS. We are under something called as NPS, National Pension Scheme. Now, for those who remember the template of last year, when it comes to NPS, people, income tax says 2 people can contribute to NPS, 1 employer, 1 employee, 1 employee. Now, for those who remember, income tax came and said when it comes to employee, the first 50,000 is allowed as deduction directly. Yes, whatever contribution make, first 50,000 you can claim. First 50,000 you can claim. Whatever balance you have, you can claim 10% of salary. You can claim 10% of salary, which is basic plus DA forming part. This is what you can claim. This is what you can claim until last year. Until last year. Coming to employer, people, coming to employer, income tax said whatever you have, you can claim 10% of salary. Whatever you have, you can claim 10% of salary. This is what you could have claimed until last year. Until last year. This is what the format was, people. Yes or no? Yes, this is what the format was. Yes, last year income tax also used to come and clarify that in this, if you are opting for default tax regime, If you're opting for default tax regime, this will remain as it is. This will remain as it is, whereas employee will not be allowed. Employee will not be allowed. This is what was happening until last year. This is what was happening until last year. In the current year, when it came to default tax regime, income tax said employee remains the same. Employee remains the same. But if you choose to go for default tax regime, if you choose to go for default tax regime, employer contribution will be allowed up to 14% of the salary. Will be allowed up to 14% of the salary. If you are going for DTR, if you are going for DTR, if you are under ATR, then there is no problem. The rules remain the same. The rules remain the same. So this is the third enhancement happening for you. The third enhancement happening for you, where income tax says if you choose DTR in the current year, I am giving you 3 additional benefits. Standard deduction increasing to 75,000, family pension increasing to 25,000, NPS increasing from 10 to 14%. That is the amendment of the current year. That is the amendment of the current year. Yes or no? Yes or no? Yes or no? Yes. Now this amendment has a linking with PGBP. This amendment has a linking with PGBP because under PGBP, income tax used to come and say that what you can claim as deduction is what you can allow for employee. What you claim as deduction for employee is the same amount which can be claimed as deduction for employer under PGBP. So under PGBP, they used to come and say until last year that employer can only contribute up to 10% as expense. As expense. If you contribute more than 10%, it gets disallowed. It gets disallowed. Current year, because they've changed it to 14, PGBP also changed, and they said now you can contribute up to 14% for an expense. For an expense, if you contribute more than 14, it becomes disallowed. It becomes disallowed. Yes or no? That is the amendment, people, which is what I told. No, PGBP we are holding back. That is the amendment. That is the amendment. So what is the amendment now, people? Not from chapter 6A perspective. Not from chapter 6A perspective, but from PGBP perspective, what will happen? You will now get a deduction of 14% of salary. You now get a deduction of 14% of salary. Now, one thing I want you to pay attention to, people, is that when it comes to employer, they standardly said 14%. They did not come and say 14 if DTR and 10 if ATR. They just said 14. They just said 14, because if you understand this carefully, people, employer will never know what employee will choose. What employee will choose. I told you earlier also, people, employee has to inform employer, but he can always change it later. He can always change it later. Imagine a case where during my employment, I went and told my employer, sir, I want DTR. Therefore, employer claimed 14%. When I filed my return, I suddenly moved to ATR, which means I am eligible only for 10%. Can the employer take a hit because of that? Can the employer take a hit because of that? No. Income tax at standard 14%. Whether you are going for DTR or ATR, it doesn't matter. It doesn't matter. Problem will come only for employee. Problem will come only for employee, meaning in the hands of employer, you will claim 14%. In the hands of employee, you will tax 14% under salaries. You will tax 14% under salaries. And when you claim a deduction, I will ask you, tell me, are you doing? If you are doing DTR, I'll give you the full 14 back. But if you are doing ATR, I'll give you only 10% back, meaning effectively you will pay tax on 4%. You'll effectively pay tax on 4%. Yes or no? Yes or no? Yes. So when it comes to NPS, people, if I have to summarize this whole thing, when it comes to NPS, if I have to summarize the whole thing, 3 places there is an issue. 3 places there is an issue. Issue number 1 is under PGBP. Issue number 1 is under PGBP. For whom? Employer or employee? For whom it is an issue? It's for an employer. People, we are in PGBP. PGBP, who's paying salary? Appa, who's going to claim expense? Who's going to claim expense? Employer is going to claim expense. People, nandana salary. I'm giving you salary. So for me, it's an expense. I am the employer. Who's doing PGBP? Employer is doing PGBP. So I'm talking from an employer perspective. From an employer perspective, income tax says you can claim 14% of salary. You can claim 14% of salary. Agreed, not agreed? Agreed, not agreed? Issue number 2 will come under salaries. Issue number 2 will come under salaries. People, who's going to report salaries? Who's going to report? Employee will report salaries. Employee will report salaries. People, employer has given you NPS. For you, it's an income. For you, it's an income. You will report it under salaries. Now question is very simple, people. If employer is only getting deduction of 14, employee can only be taxed up to, correct? No. Yes, people, if employer is only getting deduction of 14, employee will also get deduction of only tax of only 14. Imagine if employer pays 20% to you. You will say what? You will say what? Bus, employer is only going to allow 14. So employer has paid tax on 6. Will employee again pay tax? Will employee again pay tax? No. Employee will come and say, I will also tax only 14. So which means in the hands of employee, taxable up to 14% of salaries. Taxable up to 14% of salaries. Agreed, not agreed? Agreed, not agreed? We'll do a sum, people, you'll understand better. But this is what the format is. This is what the format is. Clear? Yes. Issue number 3 will come under. Issue number 3 will come under chapter 6A. Issue number 3 will come under chapter 6A. Now notice, people, chapter 6A reduction will be claimed by. Chapter 6A reduction will be claimed by employee. Why will employer claim deduction? Chapter 6A will be claimed by employee, because who is being taxed? Employee is being taxed. So this is only for employee. This is only for employee. Now employee is going to claim deduction for two components, either for my own contribution or for employer's contribution. Correct? No. Yes, people, when it comes to chapter 6A, ask whose contribution is it? Is it employer contribution or is it employee's contribution? If it is employer's contribution, who will claim deduction? Employee will. People, anyone employee is only going to claim. I'm just checking whose contribution is it. I'm just checking whose contribution it is. Whose contribution? Employer's contribution. Rules of NPS. You can claim up to 10% of salary if you are doing. And so when it comes to employer's contribution, I'm doing 10% of salary for ATR and 14% of salary for DTR. But when it comes to employees, people, can you claim a DTR? When it comes to employee, can you claim DTR? No, you can't claim DTR. So when it comes to employees, if you tell DTR, then I'll say no deduction for DTR. No deduction for DTR. But if you are under ATR, people, you can claim first 50,000 and balance for 10% of salary. Balance for 10% of salary. This is how it will operate. This is how it will operate. I know it's a little confusing, people. Let's do a sum and you'll understand better. Yes, but this is what the whole template is. So notice, people, when it comes to NPS, two people are getting involved. Employer is also getting involved. Employee is also getting involved. If I have to clarify this once again, people, NPS is what? NPS is what? I as an employer is going to contribute to NPS on your behalf. On your behalf, which means for me it's an expense, for you it's an income. So from my side, I am looking at an expense. Where will I claim the expense? PGBP. For you it's an income. Where will you report income? Salaries. But because you're reporting income under salaries, I'm also giving you deductions. I'm also giving you deductions. That is what the whole template format is. That is what the whole template format is. Is this clear? Is this clear? Yes, yes. Note down quickly. We'll do a sum. कैसे करते हैं इसको? Don't try things. Don't try things. Lesson learned. हाँ. Are we good? 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 Yes, yes, yes. Illustration number 4. Illustration number 4. I'm having Mr. C. Rishabh receiving NPS contribution from Deloitte I'm having CA Rishabh receiving NPS contribution from Deloitte of rupees 1.9 lakhs of rupees 1.9 lakhs, where the salary of Rishabh is rupees 10 lakhs. Salary of Rishabh is rupees 10 lakhs. This is what the question is. Yes. Examine tax implications for Rishabh and Deloitte, assuming Rishabh opts for case 1 DTR, for case 2 ATR, for case 2 ATR. This is what the question is. This is what the question is. Yes, 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 yes. Notice very carefully what is happening. I am coming and telling you there is a company or a firm called Deloitte which is planning to give Rishabh NPS where his salary is 10 lakhs, where his salary is 10 lakhs. That is what the question is. Maybe one thing which is probably missed out, people, you can write it down here. Assume Rishabh also contributes the same amount. Assume Rishabh also contributes the same amount. Yes. So I'm saying there is a salary of 10 lakhs, people. In that salary of 10 lakhs, I have now decided that I'll give 1.9 lakhs to Rishabh. I am Deloitte, Rishabh is employee. I'm Deloitte and Rishabh is employee. I'm planning to give this much to him. I'm planning to give this much to him. You now need to tell what happens in the hands of Deloitte and what happens in the hands of Rishabh. That is what the plan of action is. Yes. First, look from Deloitte's perspective. People, for Deloitte, Deloitte is giving Rishabh NPS. So for Deloitte, this is an expense, which means Deloitte is under PGBP. So what am I doing? I am coming and telling, first looking from employer, or as a case may be Deloitte, or as the case may be Deloitte, I am under the head PGBP. I am under the head PGBP. Now if you understand this carefully, when Rishabh got this NPS, Deloitte would have booked it as an expense. So my P&L already has an expense of 1.9 lakhs. 1.9 lakhs. Tell me percentage, people. Tell me percentage. Hey, 10 lakhs is your salary. How much you can give? How much you can give? 1,40,000 you can give. You gave 1,90,000, which is technically 19%. So you gave 19%. You can give only. You gave extra. This 5% is there in P&L, not there in P&L. There in P&L. Should be there, not be there. You will. Very good. You will disallow number 15,000. Sorry, 50,000. You will disallow 50,000 from PGBP. You will disallow 15,000 from PGBP. Yes or no? Yes or no? Yes. Now you're getting the format, people. You always first check what is happening in the books, then ask what should happen in the books, and then make an adjustment. So in the books, I already have 1,90,000. Books should only have 1,40,000, and therefore I am disallowing. Very good. Are we clear till here? Yes. Now I'm going on forward, people, to my employee, which is Rishabh. Now notice carefully, people, from Rishabh's perspective, two things are happening. First, company is giving him contribution. Second, Rishabh is making own contribution. People, my own money I contribute. Any income? No income. But employer giving me money for me. Report under salaries. Report under salaries. People, Rishabh got 1.9. Rishabh got 1.9. But in that 1.9, people, 50,000 already Deloitte taxed. 50,000 already Deloitte. How did Deloitte tax, people? Deloitte did not claim expense, so Deloitte taxed it. If already Deloitte has paid tax on it, Rishabh will not pay tax on it, which means in salaries, taxable amount 1,40,000. taxable amount 1,40,000. Agreed, not agreed? Agreed, not agreed? Yes. Now I have come to this point, people, where Rishabh has reported his income under the head salaries. Under the head salaries. Now Rishabh has to claim deductions. Now Rishabh has to claim deductions. So therefore, when Rishabh is claiming deductions, people, case will change. Case will change. When Rishabh is claiming deduction, Rishabh will now try to understand whose contribution am I talking about. Am I talking about employer's contribution, or am I talking about employee's contribution? Let's first look at employer's contribution. People, Rishabh taxed 1,40,000. Rishabh taxed 1,40,000. Now Rishabh has to claim a deduction, for which Rishabh has to decide whether he's choosing ATR or DTR. Assuming this is ATR, assuming it is ATR, Rishabh can claim 10% of where salary was. Rishabh gets, therefore Rishabh will get a deduction of 1 lakh here. Rishabh will get a deduction of 1 lakh here. Agreed, agreed, agreed. Now on the employee side, I have paid my own money. Income taxes first, 50,000 can be claimed as deduction. What are we doing? If you are doing DTR, I would have put 1,40,000. Yes, we are doing DTR. We are doing ATR here, people. Might be confused wrong. We are doing ATR. We are doing ATR. You get 1 lakh for employer, and an employee first 50,000 flat. First 50,000 flat. People, how much did Rishabh contribute? 1,90,000. In which 50,000 allowed deduction, left off deduction 1,40,000. In 1,40,000, Rishabh can contribute only 10%, which is 10 lakhs ka 10% is how much? 1 lakh. Rishabh can contribute only 1 lakh, and therefore I am giving extra deduction of 1 lakh to Rishabh. Yes, yes. Notice again carefully, people. Total contribution 1,90,000. Split 1,90,000. First 50 full deduction. Balance only 10%. Balance is 1,40,000. 10% of that becomes 10% of salary is 1 lakh. So it is 1,40,000 or 1 lakh, whichever is lower. Therefore I am giving 1 lakh ka deduction. Therefore, I am giving 1 lakh ka deduction. Yes or no? Yes or no? Yes or no? So in the hands of Rishabh, what happens, people? I am taxing 1,40,000. I am claiming 1 lakh as employer's deduction and 1,50,000 as employee's deduction. This is what is happening. This is what is happening. If I am going for, if I am choosing to go for DTR, if I am choosing to go for DTR, current year amendment comes and says, employer, you can claim 14%. Salary was 14% becomes, therefore employer deduction I get 1,40,000. Employee I get 0. Very good. Employee I get 0. This is what the final answer is. This is what the final answer is. Which one? Left side, right side? Employee was nothing, no. Employee is my own money giving into it. Under? That's what. So what is employee contribution? I'm telling my own money I'm putting in fund. Income tax is saying how much can you put? First you can put 50,000, no limits. After whatever extra you want to put, you can only put up to. My salary was how much? I can put only 10% of 10 lakhs, which is, I have put 1,90,000. I could have only put 1,50,000. So they gave me deduction only for 1 lakh. What happens to the balance 40? It is ignored. People, it's your own money. Where are you going to tax? Hey, yes or no? Yes or no? People, think about this carefully, people. This is my own money. I am putting in bank. I am putting in bank. Bank is coming and saying, you have put 1,90,000. You should have put only 1,40,000, 1,50,000. You should have put only 1,50,000. So no problem. You put 1,90,000. I will give you only 1,50,000. Balance 40. Nothing. You put, you keep it. That's it. You can't do anything with it. You can't do anything with it because it's my own contribution. You cannot be taxed for your own money. Yes or no? It's like coming and saying, I'll put money in bank. Bank will come and say, tax that money. Can you do that? Can't do that. Yes or no? That is what the understanding is, people. Any doubts on this? No, no. This is what your conclusion is. Note down quickly. It's not first 50 because when income tax is for the 50,000, there is no limits. You can contribute up to 50, no restrictions. So for first 50, whatever contribution you make in that first 50,000, I don't have any restrictions. Whatever extra you contribute, you have to restrict it up to. Are we good to go? Yes, yes, yes. Moving on forward. Moving on forward. Note it down, everyone. Yes. After that, people, I don't see any other changes when it comes to chapter 6A deductions. Chapter 6A deductions remains the same, people. There is one small green here, ignore it off. Yes, don't worry. After chapter 6A, we have TDS. We have TDS, people. Only small changes in TDS, people. Only small changes in TDS. Change number one in TDS, people. Income tax says wherever there was the rate 5, wherever there was a rate, it has now become 2. It has now become 2. It has become 2. So wherever you saw the rate 5, it has now become 2. So every time in exam, if you see the rate 5, it is now 2. If you remember where and all rate was 5, it is now 2. It is now 2. Cases where it was 5, people, commission was 5, now it becomes 2. There was something called 194M, where if you're an individual HUF not liable for audit and everything, it was 5, it became 2. That is what is happening, people. The only problem which happened is this amendment came not from the first day, it came from 30th September. It came from 30th September. It is applicable from 1st October. So for the first April, May, June, July, August, September, first 6 months it is 5. Everywhere else it is 2. Everywhere else it is 2. That is the only change, people. So I'm seeing changes in 194H. Commission becoming 5, say 2. Yes, G becoming 5, say 2. Then you have IB में 5, say 2. And then 9. Then it is 5, say 2. I'll come to that. Yes, then you have 5, say 2, and then that's it. And then that's it. Yes, this is what is happening, people. So TDS, the only thing you need to keep in mind is wherever it was 5, now it becomes 2. That is what the understanding is. Yes, I don't think 194D was changed, but let me check. DA is also changed. DA has also become 5, say 2. DA has also become 5, say 2. Yes or no? Yes. D is not coming for exams. Don't worry about it. Clear? Yes. So all cases where it was 5, people, it has now changed to 2. It has now changed to 2. Apart from this, there are 2 amendments. Amendment number 1 is section 194IA. Section 194IA, which, if I have to tell you, people, was talking about purchase of assets. Income tax said if you are going to purchase any kind of an immobile property, you will be liable to deduct TDS at the rate of 1% if the consideration or SDV, whichever is higher, goes beyond 50 lakhs. That is what the provision says. So if the provision is, if I'm buying a house from you, and I'm going to pay you 55 lakhs, income tax says you have to deduct 1% on the 55 lakhs before I make the payment to you. Yes or no? Yes. Now I am smart, people. I'm very smart. What I did is, I came to you and I said, I want to buy your house. You said the buy price is 60 lakhs. The buying price is 60 lakhs. I said, okay, because it is 60 lakhs, I will deduct 1% TDS and I'll report it to government that I'm buying house from you. You said, no, don't report to government. I'll have to pay tax. I'm like, see, that is your headache, but I have to deduct TDS. He said, Rahul, I am also smart. This house which I'm giving to you is not my house alone. I am having this house along with my wife. She is 50% share, I am 50% share. So when you give this house to me, 60 lakhs which you are going to pay is not to me. 30 is to, and 30 is to wife. 30 is to me and 30 is to my wife. So which means, from my perspective, you are giving wife 30, and from my perspective, you are giving the seller 30. Both are below. Therefore, TDS becomes 0. Income tax said, boss, this is cheating. I don't agree. And therefore, income tax came and clarified from current year, it was not consideration or SDV per transferor. It is consideration or SDV per house. Meaning, for that house, if I'm paying 60 lakh rupees, I have to deduct TDS. Whether in that house there are 1%, 2%, 10% or 50%, I don't care. As long as the value of the house is more than 50 lakhs, TDS will happen. TDS will happen. In this case, what will happen, people? 30 lakhs which is given to spouse will get a TDS at the rate of 1%, and 30 lakhs given to the husband will get a TDS at the rate of 1%. That is what will happen. That is what will happen. That is what the provisions are coming and saying. More of a clarificatory provision, people. Yes, I don't expect this to be tested in May exam, probably in September. Yes, not so much expected in May. TDS, for some reason, I don't know for what reasons, ICA has this practice that May attempt they will not test amendments. They'll test old things. September they'll test amendments. So not my expectation on May exams, but let's see. Let's see how it goes. Yes, we'll know by the time RTPs and MTPs start coming out. Yes, so the amendment of the current year comes and clarifies, people, when you're going to sell a house, even if you have multiple co-owners, if the total value of the house goes beyond 50 lakhs, then the person will be liable to deduct TDS on your payments, regardless of who gets how much. That is clarification number 1. That is clarification number 1. Amendment number 2 was a new section which I told you every year, no, they will introduce one extra letter. So they introduced one extra letter called section 194T. They introduced one extra letter got 194T. You will find it in page number 150. Strike it off. Strike it off. Not there for syllabus. Strike it off. Not there for syllabus. Luckily, ICI came and said, because this is not applicable from current year, we will not discuss it itself. We will discuss it May 26. We'll discuss it in May 26. We will not discuss it this year. Yes, because the problem, what happened, people, when this was introduced, they came and said it is only applicable from 1st April 2025. 1st April 2025, which is not even part of your year. It's not even part of your year, because your year is previous year 24-25. So therefore ICI came and said, because it's anyway coming from next year, we'll figure it out next year. Yes, unfortunately ICI made this change last minute, and therefore I could not delete from my book. Yes, and therefore it is there in my book. Good news for you, just strike it off. It's not there for syllabus. It is not there for syllabus. That is what 194T looks like. Yes, which means current year TDS only has a change in rates. It only has a change in rates. There is no new section for you to read. There is no new section for you to read. That is what the provisions are. Yes, yes, yes. Apart from that, people, no changes in TDS. TDS remains the same. We are then having no changes in payment of taxes. Payment of taxes remain the same. No changes in return filing as well. Yes, no changes in return filing as well. Return filing also remains the same. People, when it comes to tax holiday, section 10AA, there is no change as such. But this is more of a clarificatory thing, people. Until last year, I told you that this provisions were died down. It was stopped in 1920. And therefore last year variko you used to get the 5th year claim as 100%. 5th year claim as 100%. Now think from 1920, people. 1920, 2021, 21, 22, 22, 23, 23, 24. Your exam is 24, 25. So you are in 6th year of operation, which means technically for your exams, this is not there. For your exams, this is not there. It can never happen. It can never happen because you are at 6th year. No matter how hard you try, you are at 6th year. 2021 say this provision itself is not there, and therefore the last time this provision was there in 1920, and therefore for May exams there is only 50% of export profits. There is only 50% of export profits. This is a silent hint for you people that in exam by mistakenly if you end up doing ETO by TTO, always remember it is wrong, because you need to take ETO by TTO into 50%. Yes, so this exam there is only 50% rule. There is only a 50% rule. There cannot be a 100% rule for your exams. Yes or no? Yes. So if you want to make it easier for your exams, you can here itself come and say export profit is equal to profit derived into ETO by TTO into, put it here itself so that you don't miss it out. Yes, which means the exam thing you have to only read this one. You have to only read this one. Clear? Yes, yes, very simple, straightforward thing, people. Not an amendment, but for you to understand this carefully. Yes, after 10AA comes AMT provisions. AMT remains the same, no changes in AMT. And then comes your last thing called as DTR. Last thing comes in DTR. Now, amendments of DTR we have already discussed. 3 amendments: standard deduction, family pension, national pension scheme. 3 amendments which we discussed, people. Yes, that are the 3 amendments which have predominantly happened. Apart from that, has a small change in tax rates. Apart from that, you have a small change in tax rates. For me to tell you what the tax rates are, you are going to tell me what you remember. My 0 to becomes 3 lakhs to becomes लिखने दो लिखने दो लिखने दो लिखने दो. Very slow people I am. हाँ. This is what your tax rates remember. This is what your tax rates remember. Nothing has changed. Nothing has changed. ICI came and said 1 lakh we will shift from top. 1 lakh we will shift from top. Income tax came and said now it is not 0 to 3 lakhs and 3 to 6 lakhs. It is 0 to 3 lakhs, 3 to 7 lakhs. It is 3 to 7 lakhs. Therefore, automatically this becomes 7 lakhs to 10 lakhs. It is 7 lakhs to 10 lakhs, and this became 10 lakhs to 12 lakhs. This remained as it is. This remained as it is. Or in simple words, people, 1 lakh from here got shifted to here. 1 lakh from here got shifted to here. That is the only difference. That is the only difference. So which means now it is not 0 to 3, 3 to 6. That was easy, no? 0 to 3, 3 to 6, 6 to 9, 9 to 12, 3 lakhs you have increasing. Now there is not increase like that. It is 0 for the first 3 lakhs, 4 lakhs, 3 lakhs, 2 lakhs, 3 lakhs above. Once again, 3 lakhs, 4 lakhs, 3 lakhs, 2 lakhs, 3 lakhs. That is how it is. That is. Yes, yes, it is 3, 4, 3, 2, 3 above. 3, 4, 3, 2, 3 above. Yes, some phone number it is. Yes, point is people nothing. It just comes and says for the first 3 lakhs it is 0, then 3 lakhs to 7 lakhs it is 5%, 7 lakhs to 10 lakhs becomes 10%, and then 10 lakhs to 12 lakhs becomes 15%. After that everything else remains the same, which means if you technically notice people, here there was 1 lakh earlier which was being taxed at the rate of 15%, therefore you're paying tax of 15,000. You're paying tax of 15,000. That has now moved to here. So therefore now you're paying tax of only 5,000, which means effectively you're saving 10,000. That is the only difference. That is the only difference, which means effective savings now is 10,000 rupees. Effective savings now is 10,000 rupees. Last year, Variko, you would have thought for the first 15 lakhs you get 1,50,000. For the first 15 lakhs you get 1,50,000. Now for the first 15 lakhs you get 1,40,000. Yes, yes. So what am I telling people? For the first 15 lakhs you were earlier being taxed for 1,50,000. Now for the first 15 lakhs you're being taxed for 1,40,000 because technically you're saving 10,000 rupees more. Technically you're saving 10,000 rupees more. That is what is happening, people. Yes, that is the only change. That is the only change. The 3 to becomes 7, 7 to 10, 10 to 12. That is what happens. So which means now you save an extra 10,000 rupees. So going forward, when you do default tax regime, people, for the first 15 lakhs taxes 1 lakh. That's all the answer is. 1,40,000 is what the answer is. Yes or no? Yes or no? Yes or no? Yes. But this comes with a problem, people. This comes with a problem. Until last year, if you remember, you came and told me when it comes to rebate, you told me rebate is for the first total income being up to, you get a rebate of, very good, you get a rebate of 25,000. Now until last year, people, 7 lakhs was taxed at 25 and therefore you got a rebate of 25. But now if you notice, 7 lakhs becomes 5%. So for the 4 lakhs, 5% becomes 20,000. Becomes 20,000. So rebate should have also changed to 20,000. Correct? No, did not change. Did not change. Income tax made a mistake here. While income tax amended the tax rates, income tax forgot to amend. Income tax forgot to amend the rebate rates. Income tax forgot to amend the rebate rates, which means rebate remains at 25. Rebate remains at 25. Now you'll come and ask me, Rahul, 25,000 ka point kya hai? Because very good, there is no point of 25,000 if you have income at slabs, because incomes at slabs will only be taxable up to 20 only. So you can never avail the 25,000 ka extra benefit. But this problem and mistake from income tax department has now helped you with special incomes. Because where special incomes you should have got only 20,000 ka rebate, now you're getting 25,000 ka rebate. You're getting a 25,000 ka rebate, extra 5,000 ka rebate free given to you because income tax made a mistake. Don't worry, people, income tax made a mistake only this year. They have corrected it next year. Which means the only one time ICI can test you is the next 3 attempts, May, September and Jan. These are the only 3 attempts where ICI can test you for this mistake. After that, this mistake is not applicable anymore. Therefore, for your exams, my expectation, this will get tested. Yes. So the provisions remain the same when it comes to rebate, people. The changes have only happened in tax rates. Yes or no? Yes. Just for your convenience, people, one small quick question. I am coming and telling illustration number 5. So Mr. C. S. Ambhav has reported the following incomes to be taxed under DTR. Has reported the following incomes to be taxed under DTR. I am coming and saying there is an income from house property of, let's say, 2 lakhs. Income from house property of, let's say, 2 lakhs. I have an PGBP income of 3 lakh 50. I have IFOS income of, let's say, 1 lakh 50. I have IFOS income of 1 lakh 50. People, I just gave you the steps. Keeping the steps in mind, people, follow the format. Step number 1, number becomes 7 lakh. Step number 2 says identify whether you get rebate, surcharge, marginally for marginal rebate. People, I'm at rebate now because I'm in DTR. I'm at rebate 7 lakh ka rebate I'm getting at the rate of 25,000. Step number 3, split into special and normal. Looking at the question, all normal, super, everything is at slabs. Which means compute tax 0 to 3 lakhs, compute tax 3 lakhs to becomes, which is, therefore tax becomes 20,000. Rebate eligible is 20,000 or 25,000, whichever is, therefore I get, giving me a tax of, this is what the answer is. Yes, you see the mismatch. You should have actually had a rebate of only 20, but you're getting, unfortunately, 25. You're getting 25, which is causing problems. Yes or no? If I change this question now, people, and I come and say my incomes are as follows. I have income from house property of rupees 3 lakhs. I have STCG under section 111A. I have STCG of section 111A of 2 lakhs. Of 2 lakhs, and then I get LTCG under section 112A of 1 lakh 90. No, nothing given. My income is 6 lakh, making me eligible for rebate. Step number 2 gives me rebate. Step number 3 says split your incomes into normal and special. High FHP becomes 111A becomes special, 112A becomes, start checking for basic exemption limit, Kajugati, whatever you call it. Yes, start checking for that. It is already good enough for you. Move forward. Start computing taxes. For the 111A, I get 40,000. For the 111A, I get 40,000. For the 112A, I will remove 1 lakh 25,000, multiply by, number gives me, therefore 41, 48, 125, 125 minus rebate of what versus 25,000, whichever is lower. It is 40,000 or 25,000, whichever is, because you are not eligible for rebate on 112A. Therefore, it is 40 versus 25, whichever is lower. Therefore, it becomes 25,000, giving me a tax of 23,125. Adding a cess, number becomes 0. Very good. Becomes 24,050. Is this clear for everyone? Are we good to go? Yes, yes. What if I rework this question, people, and I give you that I have IFHP of 3 lakhs. I have IFHP of 3 lakhs. I have 5,90,000 here. 3,90,000 here. Hey, see, one second. I have 3,90,000 here. ठीक है, नो रिबेट तो क्या, टैक्स तो बता. My slab getting exhausted, people. 3,90,000 becomes taxable minus 1,25,000 plus 12.5%, number becomes 125. My tax becomes 33. 125. Rebate will be 0 or 25,000, whichever is, therefore 0, giving me a tax of, totaling with the cess 450. 34,450. Yes, this is how it works, people. This is how it works. Once you get a hang of it, it becomes easy. Yes, this is what the whole format template is. Any doubts on the format template? No? Okay, not an amendment thing, people, but I just want to check quickly. I am having an HP income of 3 lakhs. I'm having a PGBP income of 3,20,000. 3,20,000, and I have IFOS income of 1,10,000. No, only 1 lakh. You get, therefore my tax becomes 20,000. Hey, my tax becomes 20,000. Why, people? My extra income is 20,000. My extra income is 20,000, but for which I'll end up paying way more. Because for the first 7 lakhs itself I'll pay 20. For the balance 20 I'll pay another 10%. For the balance 20 I'll pay another 10%, which becomes 22. So I am being asked to pay 22 for an extra income of, I will end up paying only 20. I'll end up paying only 20 with the 800. 2 into 4 mega. 20,800 becomes the answer. Yes. Marginal rebate is an important topic. Is an important topic. I told you earlier also, people, as long as your income is up to 20, current year amendment 7 lakh 20 now. Yes, because your 7 lakhs gets a tax of 20 now. So up to 7 lakh 20, 7 lakh 21, 22, hit that numbers. You have to always apply for marginal rebate. You'll have to apply for marginal rebate. Yes or no? Yes, that is also part of your step process, people. Any doubts on this? Are we good to go? Yes, great. This is your default tax regime topics, people. In default tax regime, 2 amendments critically which is there. One amendment is relating to your tax rates. And 3 amendments is point number 7. So 3 amendments in point number 7, your standard deduction amendment, your NPS amendment, and your family pension amendments. All other provisions are remaining the same, people. No changes in the provisions as such. Yes, after that you have your agricultural income where there is no change. You have your unexplained income which changes nothing, and then you have your exempt income which also does not change. This is how your amendments look like, excluding capital gains. Shall we cut for a break and come back and do? Yes, too much heavy. Let's come back. Capital gains is going to be heavier. Yes, so eat properly, come back, and then we'll discuss this patiently. Yes, let's take a break, people. All right, we are starting with the next important thing from your syllabus, people. The ones which have predominantly changed is what we are calling as capital gains. Couple of things to be changed, people. While yes, there are significant amendments like people have been talking about, but nothing very critical. Yes, you can actually summarize everything in couple of 3 points, not much than that. Yes, so the first amendment in capital gains, people, is on your classifications. Your first amendment is on your classification, basically how to decide whether an asset is long term or short term. Yes, now for those who remember, people, from the top of your head, items which are determined as long term and short term based on period of holdings. Based on period of holdings. The type of assets which you have in period of holding, people, help. You had listed securities, very good. Zero coupon bonds, units of UTI. Units of UTI. These are the three items which were part of the first bucket, where you will be calling them as long term, provided they are held for more than 12 months, and they will be called as short term if they were held for less than or equal to 12 months. This is what we had. Yes. Then we had something called as immobile property. Then we had unlisted securities. Unlisted securities. These two items getting a bucket of more than 24 months and less than 24 months. Less than or equal to 24 months. And then came in your last garbage, which was others. Which was others, along with something called as slump sale. Along with something called as slump sale, where it was more than or equal to. And this is what you had until last time. This is what you had until last time. Yes or no? Yes or no? Yes or no? Yes. Here, income tax then stood up and came and said, you know what, 36 looks too long. 36 looks too long. Let's scrap it off. Let's scrap it off. And therefore, people, amendment came in the syllabus where they came and said, now there is no more 36 months. There is no more 36 months. Things are either moving to 12 or they're moving to 24. They're either moving to 12 or they're moving to 24. This others, people, actually had two items. One was called business trust units, which was business trust units, and then there is normal others. People, why am I doing this business trust? Those who remember, people, when we did 112A, in 112A there are three items. Item number 1 is called listed equity shares. Item number 2 is called equity oriented funds, and item number 3 was business unit trusts. Business unit trusts. Now if you notice carefully, listed equity shares is part of 12 months. Equity oriented fund is also part of 12 months, but business trust alone was sitting in 36. There was a mismatch. Therefore, Nirmala ma'am came and said, why exactly this mismatch? It's causing confusion. Let's make business trust also. And therefore came in the amendment, people, where they came and clarified the first amendment being business trust unit is now moved to 12 months period. Business trust was moved to 12 months period. Yes or no? Yes. On the contrary, people, like I said, because we have scrapped everything else, in 36 months, the others moved to, which means this now became others with a bucket of 24 months. This now became a bucket of 24 months. This is what happened, people. This is what happened. So what happened? Nothing. They took the others and they split them into two. Business trust moved to 12 months, others moved to 24 months. That is what the amendment came in classifications. Yes or no? Yes or no? Yes. But later on, people, when all the analysis was happening, we actually understood there was a big mistake which happened. When they were doing this reclassification, they only did the reclassification for others. They forgot to do it for, and therefore slump sale is still at 36 months. Slump sale is still at 36 months. It's an error which happened from income tax. Which we felt income tax will rectify. And therefore, we kept it at 24. But later on, income tax did not clarify. And therefore, ICI took it as 36 months. People, on your books, you will have to make a small change in your classification. In your classification, you will not see the last item called 36 in slump. Yes, please have that included. What you will see is securities listed, equity oriented funds, business unit trust, UTI and zero coupon bonds at 12. And then you will see land and building and unlisted in 24. You will not see slump sale. Please include slump sale separately and call it 36 months. Please include slump sale separately and call it 36 months. Again, people, this is less of my mistake, more of income tax issue. Ideally, ICI should have come and clarified saying it should have become 24 months, but for some reason ICI did not do it, and ICI wants to keep it at 36 months. So therefore we retain it at 36 months. Yes. So this is your first amendment, people. The classification change, where all assets remain the same except for business unit trust, which moved to 12 months, others moved to 24 months. Slump sale still remains at 36 months. That is what the amendment is. Clear or not clear? Yes or no? Yes. Although, people, like I said, these amendments were introduced by Finance number 2 Act, and therefore they are not applicable from 1st April. They are applicable from 23rd July. which means these changes which you see is only applicable from 23rd. Before 23rd July, what you learnt earlier remains. What you learnt earlier remains. My gut feeling, people, I say I will not test you on both, meaning I say I will only test post 23rd July. I say I will only test post 23rd July. Therefore, I don't expect you to remember things before 23rd July. Period of holding is good enough from post 23rd July. That is good enough to go. Yes, that is your classifications, people. Change number one. Change number one. At the same time, people, if you notice somewhere in the middle, you see some greens. You see some greens. Now we have discussed two greens, one about business trust and one about others. What we have not discussed is on the top, something called market link debentures. People, for those who remember, in Jan batch itself, I had told you that there was an amendment where the amendment came and said when there is market link debentures, there is no period of holding. They will straightforward be called short term. They'll be straightforward called short term. Current year, two more items are added. Two more items are unlisted debentures and unlisted bonds. Unlisted debentures and unlisted bonds. Here is income tax coming and clarifying from current year. From current year, any unlisted bonds and unlisted debentures will also be always short term and will not be categorized into long term at any point of time. Will not be categorized into long term at any point of time. So this is your second amendment. This is your second amendment. So amendment number one, classification. Amendment number two, unlisted bonds and debentures are always short term now. Is this clear, everyone? Are we good to go? Yes, yes. Let's create a summary, people, so that you understand this better. I'm going to give you the assets. You're going to tell me period of holding. You're going to tell me period of holding, whether it is long term or short term. To make it long term, what is the period of holding? And finally, what is the section applicable? Section as in 112 or 112A, because the moment something is 112A, it's automatically 111A. So when you say 112A, it automatically means 111A depending on the period of holding. Yes, I'm going to give you the asset. You're going to tell me. Yes, yes. First one, listed equity. Period of holding, people. For it to become long term, period of holding 12 months. Section applicable. Very good. 112A. Yes or no? Yes. Second, people, I am saying listed preference. Period of holding 12 months. Section applicable. 112. Only 112. People, 112A talks about equity shares. Then we have equity oriented funds. Period of holding same 12 months. Section 112A. People, three assets are in 112A. Asset number one, equity shares. Asset number two, equity oriented funds. Asset number three, business trust units. Yes or no? Then we have zero coupon bonds. Period of holding. Section applicable 112. Very good. Then we have business trust units. Amended 12 months. Section applicable. Very good. We have market linked debentures. Period of holding always short term. Yes or no? People, because it is short term, can you call it 111A? No, because these are debentures. Will become others. Agreed, not agreed? Slab incomes. People, wherever I put 112A, it also means 111A. Wherever I put 112, it also means others, depending on whether it is long term or short term. But when it comes to market linked debentures, it can never be 112, it will always be others. Yes or no? Yes. Immobile property. Period of holding is 24 months. Section applicable. Or that's all. Agreed. Then jewelry. Very good. It is 112 or others. Agreed. Then slump sale becomes 36 months sections applicable or others. 112 or others. Yes, yes. Unlisted equity. Very good. Section applicable or good enough. Unlisted debentures. Always short term. Amendment of current year. Section others. Car. Very good. People, for it to be a capital asset, it needs to satisfy BA pass. Needs to satisfy BA pass DJ, does not fall there, and therefore it becomes not a capital asset. These assets are exempt. These assets are exempt. Yes, 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 yes. Last one. Rural agri land. This also gets into agricultural income. This also gets into agricultural income and therefore exempt. Yes, I have urban agri land. Haha. 24 months. People, what you think in the first go is always right. Feel confident. Unless you're writing Rahul's paper, that's a different conversation. Yes, yes, yes. These are your asset classifications, people. These are your asset classifications. Again, more for your understanding and reference, nothing significant about this. Clear enough to go? Clear enough to go? Yes, this is your amendment number 1. This is your amendment number 1, talking about your classifications. Amendment number 2, talking about all your unlisted bonds and debentures now becoming short-term assets. Now becoming short-term assets. Are we good to go till here? Yes, 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 yes. Moving on forward, people, if you're done with this. Podama. Yes, yes, yes. Comes in your amendment number 3, people, which is regarding LTCG under section 112. Coming to your amendment regarding LTCG under section 112. For those who remember carefully, people, we just discussed when it comes to 112, the rates have dropped from 20% to 12.5%. Obviously, people, if income tax is dropping such a significant rate to you, where they're saying 20% now drops to 12.5, do you think income tax department is going to give it just like that? No. Income tax department came with a clause which said, because I'm dropping your tax rate from 20 to 12.5, the one thing which was giving you benefits in LTCG, nothing but the one benefit which you get in LTCG 112, people. Huh? Indexation is forever removed. Which means now you will be taxing long-term capital gains at 12.5% without indexation. So that one big problem which you had is gone forever. Now there is no more indexation. Whatever cost you have, take it as it is, and that becomes your answer. So technically, wherever you had indexation in this whole chapter, people, all are scrapped. There is no more indexation. However, like I said, amendment came only from 23rd July. Amendment only came from 23rd July, which means up to 23rd July, whatever you learned last year remains the same. After 23rd July, no indexations will be granted to you. Which means you have to read what is in Jan and also you have to read what is in May. That is what is happening. That is what is happening. Yes, yes. So what is the amendment, people? Income tax comes and says any asset which is transferred before 23rd July, before 23rd July will now be taxable for a rate of 20%, but I will get indexation. Any asset which is transferred after 23rd July will now get taxed at a rate of 12.5%, but it is without indexation. It is without indexation, which means the answer of capital gains under long term and short term will now mean the same. Will now mean the same. In short term, you are anyway not giving indexation. Long term will also not get indexation, which means capital gains will remain the same. Will remain the same. But if it is long term, you get taxed at 12.5. If it is short term, you get taxed at slab model. You get taxed at slab model. That is what the amendment is, people. Yes. So therefore, in this whole book, wherever earlier in Jan you read all indexations and all have been all removed off from the syllabus. You don't have it itself now. Yes. So this book will have smaller chapter of capital gain as compared to what you had in the last year. As to what you had in the last year, with the caveat that yes, you need to follow what happened in the last year if your asset is transferred before 23rd July. That is what the understanding is. That is what the understanding is. Yes or no? Yes. Here comes the critical question, people. If you remember capital gains carefully, some part of the syllabus had something called insurance compensation, compulsory acquisition, any kind of conversion of capital asset into stock in trade. Yes. Imagine a case, people, where I give you a question. The question comes and says, Rahul has an asset. Rahul has an asset which was compulsorily acquired. Which was compulsorily acquired on 1st April 2024. This asset was compulsorily acquired on 1st April 2024, but the installment was received on 15th November 24. 15th November 24. Now this is what is happening, people. Understand, my asset was transferred on 1st April, but installment is received on 15th November. Now for those who remember this provision, people, income tax said capital gains will be computed on the date of acquisition, which is 1st April, but capital gains tax will be paid when installment is received, which is 15th. Will you do it as per old law or new law? Will you do it as per old law or new law? You will do it as per old law. You will do it as per old law. People, that is what I've been telling you in classes also. Understand here, the capital gains computation happens on 1st April. The tax alone is being paid on November. The tax alone is being paid on November. Yes or no? That is why in class also we discussed about, people, when indexation and all happens, indexation stops on the capital gains date. The tax alone is being paid in the subsequent date. So when we did in class also, people, I would have told you that if the asset was transferred in 2020, but money was received in 24, you will stop period of holding in 2020. Indexation will stop in 2020. Only payment is happening in 20. So technically, people, when 1st April, when the asset was acquired, that time had this amendment come, not come? Not come. When the amendment had not come, you would have computed as per old law, which means with just that the tax alone is being paid in November. Just that the tax alone is paid in November. Therefore, the answer to this is do as per old law. Therefore, the answer this is do as per old law. So therefore, people, when it comes to the exceptions to the year of transferability, like compulsory acquisition, insurance compensation, conversion of capital asset into stock in trade, for all the three cases, if the capital gains is happening before 23rd July, you will still do as per old law, even if the money is received after 23rd July, which means provisions of indexation will continue to apply. How does hire purchase matter here? What are you doing? You're selling or buying? Who are you? For you, hire purchase asset is a stock in trade or a capital asset? How does it matter? You're selling a stock in trade, right? Where will you taxing it under? PGBP. I'm only talking about those assets which I sell as. Keep the thought in mind. Good question, but definitely be careful about it. Yes, yes, yes. So I'm coming and telling people, going forward, what is happening is income tax comes and says if it is sold after 23rd July, then you will have tax rate of 12.5%, but without indexation. Only when the transfer happens after 23rd July, not the tax to be paid after 23rd July. Transfer should happen after 23rd July is what the rules are. Yes or no? Yes. What if I change this question a little bit, people, and I come and say this is 1st April 2020. 1st April 2020, and the transfer money is received in 2024. You're going to pay tax in 24, but capital gains will be computed in, which means you need to do as per old law. And if you're doing it as per old law, indexation will stop in 2020. Indexation will stop as per 2020. For those who remember, people, indexation formula: cost of acquisition into CII of the year of transfer divided by, that is what it is. That is what it is. Yes, in this case, people, acquisition will be some old date, 2006, 2008, but acquisition transfer date will be 20. Ada 20. Yes or no? It will be 20, people. 2020. It will be 2020 because that is when I transferred. I am only receiving the money in 24. I am only receiving the money in 24. ऐसे हंसोगे तो अच्छा लगेगा ना? रोते हुए मुंह लेके आए हो. Yes, it is 2020. Yes or no? Yes, so it is transferred on 2020, and that is what the answer would be. That is what the answer would be. Yes or no? Yes or no? Yes, because my acquisition happened in 2020 itself. That is what the date will stop off. Yes, while the money may have received after 23rd July, it does not matter. It does not matter. Is this clear? Is this clear? Yes, that is what amended, people. So therefore, if I give you a question right now, where the question comes and says, Mr. A has a share. Mr. A has a share which was purchased on, let's say, 6th July 2020 for rupees 100, and he sold the share on 2nd February 2025 for rupees 180. I am asking you to compute CG. I am asking you to compute CG. Now, people, questions like this for this year alone, you need to first check when the transfer took place. My transfer took place on, which is after 23rd July. The moment it went after 23rd July, people, question number 2, check whether it is long-term asset or short-term asset. People, this is an unlisted share. Therefore, period of holding becomes 24 months, starting from 2020 to 25. More than 24 months. Therefore, this is long-term asset. Long-term under 112. Long-term under 112. Format template, people. You will take full value of consideration, which is, you will take, normally you will break your head here. You will take that 100, multiply by CII of 24 divided by CII of, I don't care. I'm going to take 100. Number is, this is my under section, multiply at the rate of, this is your answer. This is your answer. Yes, that simple it is. That simple it is. Problem will start if I give you in this question, this is 2nd April 24. If I give you to 2nd April 24, now this is before 23rd July, old laws will apply. You need to do for the 100 rupees. You need to do indexation for the 100 rupees into CII of the year of transfer divided by CII in the year of acquisition. All that nonsense has to happen. All that nonsense has to happen. If it comes after 23rd July, bale bale for you. No indexation, take the number as it is. Take the number as it is. Yes or no? Yes or no? That is what the new laws is, people. That is what the new laws is. Agreed. 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 But if things were that simple, why would it be an amendment? Yes. Yes. Think about this carefully, people. If I come and tell you it's Mr. A who has bought a house, for, let's say, rupees 1 crore in 2001. I bought a house for rupees 1 crore in 2001, and in current year I am selling on, let's say, 10th December 24 for 2.8 crores. For 2.8 crores, I am asking you to compute CG and tax payable. Now, before you hurry, people, think about this carefully. My full value of consideration in this case is 2.8 crores. The problem, what happened is, I looked at my cost of acquisition, which is 1 crore. But since the transfer happened after 23rd July, I have to take it as 1 crore. So I took it as 1 crore as it is. My gains became 1.8 crores. So this is my long-term capital gains under section 112. Assuming my Kaju Katli is not there. Directly 12.5%, number becomes, I'm ignoring cess right now, people. Acha. I'm ignoring cess right now, assuming this is the number. Assuming this is the number. Now, assuming this amendment had not come, I would have been liable for indexation. Yes, assuming my full value of consideration, people, which is 2.8 crores, I now too have to do indexation of 1 crore into, people, your syllabus has changed, your indexation also changes. It is now 363 by 100. Don't worry, indexation will be given in the question. From the current year, ICI has stopped assuming indexations and asked you to stop worrying about indexations. ICI will give you the indexation number, so you don't need to remember this anymore. But hypothetically, people, because of this, now it becomes 3.63 crores. For someone who wants to try, take calculator and try. Yes, number becomes negative 0.4383, 0.83 crores, 0.83 crores. Yes or no? So I am now reported a loss. Think about this, people. Think about this. I was actually not supposed to pay anything. Just because Nirmala ma'am one day suddenly felt like we should remove indexation, I am now asked to pay 22,50,000. I am okay. I am not okay. Yes or no? Yes. When the budget was passed, people, Nirmala ma'am came and said we are now doing 12.5 without indexation. Full stop. Everyone in India started jumping and started giving examples like these. And the examples came and said, now where Nirmala ma'am is saying I'm reducing tax, she's actually exploiting us more. Hi, BJP. Yes, all that started. Nirmala ma'am going on tours of India. Everyone is going and cursing, saying, ma'am, this is all cheating. I have actually made a loss because inflation is not happening also. I have actually reported loss, ma'am. But now for loss itself, you're asking me for tax. For loss, also you're asking me for tax. I am not happy. When this went on for 3 months, people, that time they had to stand up. And therefore, before the budget became an act, Nirmala ma'am proposed a amendment. The amendment came and said, only for immobile property, because that is what you're making hangama for. Only for immobile property. If you can prove it to me that the old law gives you lower tax, I will permit you to pay lower tax. Or in simple words, income tax said it is LTCG at the rate of 12.5% without indexation, or LTCG at the rate of 20% with indexation, whichever is. That is what happened. Usually has been amended. So now it is not there. Yes. So income tax said if you are going to sell any property after 23rd July, split the property into two, either immobile property or others. If it is others, no exception. Always 12.5 without indexation. If it is immobile property, do both. Check whichever is. You end up paying that much as tax. Agreed. Yes. Question. Left side is showing income, right side is showing loss. I am choosing loss. Because if my tax becomes, so I am going and telling ma'am, my left side is showing tax of 22, right side is showing 0, I will pay. She said okay, pay 0. I said also ma'am, right side is showing, I want this to be set off and carry forward. I want this loss to be set off and carry forward. Nirmala ma'am said, I only brought an amendment for tax, never bought amendment for incomes. Income remains the same. No change in the income. Income will remain at 1.8 8 crores, no change in the income, no change in the income, and therefore the amendment comes and talks as follows, people. The amendment comes and says, when you have an immovable property which is transferred before 23rd July, only apply old laws. If the property is transferred after 23rd July, then tell me what is the tax as per old law, tax as per new law, whichever is lower, that is what you can pay as tax, but your income will remain as per new law. No change in the income will remain as per new law. Meaning the right side, what you're doing, people, will not form part of your income statement. The right side will only form part of your tax liability, meaning you need to do the right side only when the question asked for computing does not to be applied. If you are doing, meaning in exam, if you get a question, people, where the question says compute capital gains, full stop, do only left side, that's all, because they only want income, and income is always as per new law. If the question says compute capital gains and tax payable, you will do first income as per new law. When you compute tax, you will do tax as per new law, tax as per, compare whichever is and put that as your, but your income will remain as per new law, correct, not correct, hey, you understand what is happening? Yes or no? Yes, we'll try your question, people, but this is what the provisions are. Where can you find the provisions? You have to go quickly to page number 97. Page number 97, people. Page number 97. If you see the 97, people, I see some amendments. Yes, notice on the top it says only with effect from 23rd July, meaning whatever is before 23rd July will remain the same. No changes in the 23rd July. Post 23rd July, people, rules come and say when it is listed equity shares, equity unit funds or business trust, it is at the rate of 12.5% in excess of 1.25 lakhs. Short term becomes 20%. If it is 112 case, then split into two. Tell me whether it is land and building or others. If it is land and building, people, then I'll again split them into resident, individual or HUF or others. For your syllabus, it is only individual and HUF. For those people, income tax says if it is acquired before 23rd July, do as per old and whichever is. If it is acquired after 23rd July, then the provisions itself will not apply. Then you can do directly new loss. Whereas if it is any other asset, then it is directly 12.5%. People, you're going to write a note. I think it's already here in 112. Yes, this is what your rules are, people. In 112, this is what your rules are. In page 99, if you notice, it says LTCG which is arising from the transfer of land and or building which was acquired before 23rd July will be taxable. Highlight the word taxable. Will be taxable at the rate of 12.5% without indexation, 20% with indexation, whichever is beneficial to the person. Where indexation formulas we remember from last time. The point number 4 is what is more important, people. The point number 4 comes and says the proviso is only enabled to avoid increased tax payable under new provisions. The same does not apply in case indexation results in a loss, which means if you get a lower income as per old law, you will ignore the losses as per the old law. You will continue as per new law only. Tax alone will change accordingly. Yes or no? Yes, we'll give some examples and we'll do better, people. But the warning sign to you, people, is that this will not be informed in exam. You have to do it yourself. In exam, they will simply come and give you the facts and they'll say go compute tax. If you hurry and come and say post 23rd July do 12.5 without indexation, 0, because you need to check whichever is beneficial to the assessee. You need to compare both and check whichever is beneficial to the assessee. Yes or no? Yes, we'll do some questions on this, people. So that you understand this better. Yes, but before I start doing questions, this is an immovable property and therefore there were various other laws which needs to be kept in mind. SDV, 110%, transfer acquisition, Advance forfeiture and all those things. Too many things to remember. You have a format for that? You have a format for that? No? You remember those provisions? I'm giving you 5 minutes. I'm giving you 5 minutes. You're going to go through those immobile property specific provisions. Go through the immobile property specific provisions and we'll take that and we'll do some sums. Yes, I'll this time give you a new format also to keep in mind how to do immobile property. But before I do the format, you are going to check and study. You're going to check and study. So check the immobile property related provisions. Then we'll come and discuss about this. We'll do some. We'll do a sum. You'll understand better. Yes, 5 minutes for you people. Check and tell me what the old provisions are specific to. 5 minutes. Ready, everyone? Yes, 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 yes. I know immobile property can become a little daunting because there are various things to be legged into. So what we'll do is we'll prepare a master. We'll prepare a master, a format for immobile property alone. Yes, ignoring the whole capital gains, just for immobile property, we'll prepare a format. We'll prepare a format. You follow the format, and if a question comes in immobile property, free 8 marks. Free 8 marks. That is the kind of format we're going to prepare, people. Yes, one format, free 8 marks for you if you can follow the format as it is. Yes, blindly trust the format and we can go forward. I'm going to consolidate all the provisions relating to immobile properties in one table. In one table. Can we do that? Yes, great. Let's do that, people, before we start doing the sums. Yes, when it comes to immobile property, the format will as such remain the same. The format will as such remain the same. People, how do you do immobile property? What is the template? You start with full value of consideration. You start with full value of consideration. Don't write. Let me write first and then we'll come with that. Yes, we start with something called full value of consideration, which is nothing but the money which you're going to receive. Nothing but the money which you're going to receive. Now, you are planning to receive 1 crore rupees. You are planning to receive 1 crore rupees, in which income tax is coming and saying, boss, first go and check what is the stamp duty value. If the stamp duty value is showing 1.5 crores, income tax says, why are you receiving 1 crore? You should have received, which means you have technically cheated me, and therefore they will ask you to report, which means technically it is SDV or actual consideration, whichever is very good. Yes, so it is SDV or actual consideration, whichever is higher. But if you are not happy with SDV, you can go and inform valuation officer, and if valuation officer gives you a lower number, you can take valuation officer. So in simple words, it is SDV or FMV, whichever is lower, compared with sale value, whichever is agreed, not agreed. Think about this carefully, people. I am coming and saying I am selling for 1 crore. He is telling me to sell for 1.5 crores. I go and complained officer and I said 1.5 is not right. I want 1.3. Then they will say, okay, take 1.3, compare with 1, it is still high. Therefore, take 1 point, which means I did 1.5 or 1.3, whichever is compared with my actual sale value, whichever is agreed, not agreed. So when it comes to full value of consideration, people, income tax has said it is nothing but FMV as per valuation officer or stamp duty value, whichever is lower, as on transfer date, whichever is lower. This is then being compared with actual sale value, whichever is agreed with me. This is what the template format is. But on the date of transfer, people, sometimes you may also get 2 SDVs, either the date of transfer or the date of agreement. You can take agreement provided you get advance by. Very good. So I'm putting an asterisk mark here and I'm saying SDV on agreement allowed. SDV on agreement allowed if advance received by permissible modes. If advance is received by permissible modes. Agreed, not agreed. But at the same time, people, the same section comes and says, forget this whole provision. If you can prove me that the SDV is within 110% of. Very good. So I am coming and saying this whole provision is not applicable if SDV is less than or equal to 110% of consideration. Whatever the spelling is. 110% of consideration. Yes or no? Yes or no? This is my FVOC. Any doubts on the FVOC? No. This is my first thing. The price at which I am selling, the price at which I am selling. Now the moment I sell, people, I will incur some expenses, so I will then remove something called transfer expenses. I will remove something called transfer expenses. So I will arrive at the full value of consideration here. I will remove something called as transfer expenses in order to arrive at something called as net consideration. I will start, you will finish it. I will arrive at something called as net consideration. Yes or no? Yes or no? Now I know how much money I have in my hand from selling the asset. From selling the asset. Now I want to know how much profit I made. How much profit I made. So I am now going to start removing all my cost of acquisitions. So I'm going to start removing all my cost of acquisitions. Cost of acquisitions. Here income tax toll, if you are going to have the cost of acquisition before 1st April 2001, if you have planned to buy the asset before 1st April 2001, income tax says then it is FMV on 2001 or SDV on 2001, whichever is compared with actual cost, whichever is, people, if you notice carefully, same as above, same as, dates alone are changing, dates alone are changing. Yes, so I am saying if the asset is purchased before 1st April 2001, take the FMV on 2001, SDV on 2001, whichever is compared with actual cost of acquisition, whichever is, that's all is the answer. That's all is the answer. Agreed, not agreed? Yes, but if the asset is purchased after 1st April 2001, you don't have an option. Take actual cost as it is. Take actual cost. People, benefits only given to you when it's purchased before 2001. If you're purchasing after 2001, no benefits. Take whatever is your actual cost. Agreed, not agreed? Agreed, not agreed? Yes or no? Yes. In this cost of acquisition, people, I will then remove something called as advance forfeiture. I will then remove something called as advance forfeiture. So I have a number here. From this number, I will remove something called as advance forfeiture, provided before 2000, before 2014, if I have an forfeiture. If I have an forfeiture, this will then give me what is my cost of acquisition. This will then give me what is my cost of acquisition. Agreed, not agreed? Agreed, not agreed? Yes or no? Yes or no? Yes. Then I arrive at something called as cost of improvement. Then I arrive at something called as cost of improvement. Again, here, people, income tax comes and says if the cost of improvement is before 1st April 2001, I will ignore it off. I will ignore it off. We told no improvements before 2001. No improvement before 2001. If it is after 1st April 2001, I can take the actual cost. I can take the actual cost of improvement. But last year's amendment, Jan amendment, if you remember, if I have paid any interest on loan for HP, which is already claimed, I will remove that off. In order to arrive at my cost of improvement. Arrive at that cost of improvement. This is my long-term capital gains. This is my long-term capital gains. Agreed, not agreed? Yes. In this long-term capital gains, people, then I can claim something called exemption. I can claim exemption under section 54 or 54 ECA. You can't claim F. F is when you sell something else and buy house. I am now selling a house itself. Therefore, this is only for 54 and 54 EC. You get this exemption, people. You will arrive at what your taxable capital gains is. You will arrive at what is your taxable LTCG. You will arrive at your taxable LTCG. Agreed, not agreed? Agreed, not agreed? Yes. But people, this is all happening only if you're selling after 23rd July. If you're selling after 23rd July. So which means we'll put a note here. If transferred before 23rd July 24, COA and COI will be, very good, will be indexed, where indexation is COA or COI into CII in the year of divided by, super, acquisition or improvement, CII in the year of acquisition or improvement. That is what you'll do if you want to do it before 23rd July. Yes or no? This will give you your taxable LTCG. Taxable LTCG. Yes or no? Yes. Then comes the question as to how to compute tax. Then comes the question on how to compute tax. If tax is for transfer before 23rd July 24, take the long-term capital gains with into 20%. If the transfer takes place on or after 23rd July, then you will do LTCG without index at the rate of 12.5% or LTCG with index at the rate of 20%, whichever is lower. Notice very carefully, I am only putting the indexation numbers after taxation computation. This is never impacting my income statement. Income statement is at the same level only. Income statement is not indexed because it is after 23rd July. It is after 23rd July. Note here, if after 23rd July indexed value is relevant, not relevant, not relevant, tax will be lower of 2, but income is always as per new law, that is without indexation. Very good. That is without indexation. If you know this format, 8 marks. Yes, that is how the format is. That is how the format is. One small format will answer everything for you. People, I may not be very ruly in writing. Glorify it however you want. Yes, glorify it however you want, but this is what the template format is. Yes, take the time and note down the template. Yes, let's see how this format works, people. Let's see. What we'll do is, nothing we'll do. We'll keep the format intact. कोई change नहीं होगा format में. We'll read the question, and as we see numbers in the question, we'll try to understand where does this number fall in the format. After that, format will take care of itself. Format will take care of itself. Can we do that? Yes. Let's look at one question, people. One question which suggested by ICI. One study material question. Yes. The question says, Mr. Shiva is purchasing a house property on 15th February 1979 for 3,24,000. So there is a person called Mr. Shiva who's purchased the house in 1979, which means the cost is before 2001. This is clear to me. I have purchased it for 3,24,000. This is my actual COA. This is my actual COA. In addition, he has also paid a stamp duty at the rate of 10% on the stamp value of 3,50,000. So for buying this house, I had to pay a SDV. I had to pay an SDV of 35,000. People, the cost which I paid will get added to my actual cost, because I told you cost of acquisition means all money which is paid before the asset is acquired. So I have acquired it for a price of 324 plus 35,000, 359,000. Yes. Now this 3,50,000 which you're seeing on the screen, people, relevant, not relevant? Relevant, not relevant? Relevant, not relevant? Not relevant. Tell me why. You take SDV as on 2000. This is SDV as on 1979. Not important information. That's why I said stick to the format. Stick to the format. Everything other than the format is waste. Huh? It doesn't matter because you want SDV as on 2000. So whatever is on 2001 is what is relevant. Anything else is irrelevant. I'm ignoring this information of. Yes, this is my new cost of acquisition. My cost of acquisition is now 3,59,000. Can we go forward? Can we go forward? Yes. Next, in April 2008, Mr. Shiva entered into an agreement with Mr. Mohan for sale of such property for 14,35,000. People, this 1435 is as on 2000. Relevant, not relevant. Relevant, not relevant. Not relevant. Why is it relevant? People, are you selling in 2008? You are selling in 2024. This information is not relevant. Did I put it somewhere in the format? No, I did not put anything in the format. This is not relevant. But for this 14,35,000, he received an advance of 1,11,000. Is this information relevant? Because the format has advance forfeiture before 2014. This is 2000. Therefore relevant. Therefore relevant. However, the sale consideration did not materialize. Shiva forfeited the advance. Super. That is what we know. You will take this number and minus it from the cost of acquisition. Correct? No. Yes. After that, in May 2015, he again entered into an agreement for sale of the house for 20,25,000. Relevant, not relevant? Not relevant. To Mrs. Deepshika and has received 1,51,000 as advance. It is after 2000. Therefore, remove it off. Remove it off because I am doing capital gains in current year. IFOS is 2015. That year something would have happened. I don't care. I don't care. So this information is also irrelevant. I am moving on forward. However, Deepshika did not pay the balance amount. Shiva forfeited the advance. In April 2014-15, Shiva constructed the first floor by incurring a cost of 3,90,000. I have done cost of. Very good. This is my COI. And this COI is after 2001. Therefore, I will take this number. I will take this number. On November 15, 2024, people, your year. Your year only, no. This is your year. Hey, you are in 24-25. Final year for your exams. Yes, Mudigno. 24-25 is your year. That is the year in which this sale has happened. 15 November 24, Shiva entered into an agreement with Manish for sale of such house for 30,50,000. This is my actual sale price. This is my actual sale price and has received an advance of 1,50,000 as advance through account pay check. Relevant, not relevant? Relevant, not relevant? Number is not relevant. Number is not relevant. Facts are relevant because received money in advance by permissible modes. My SDV will be as on agreement date. Mr. Manish paid the balance entire sum. Shiva transferred the house to Mr. Manish on Feb 20, 2025. This is my date of transfer, which is after 23rd. I will do as per new for income. For tax it is new for income, tax for both. New for income, tax for both. Shiva has paid brokerage at the rate of 1% of the sale consideration to this broker. This is my transfer expense. On 1st April 2001, fair market value is 1185. Relevant, not relevant? Relevant. Stamp duty is 1070. Relevant, not relevant? Relevant. Further, valuation officer of the property on 15th November is 39 lakhs. 20th February is 41 lakhs. I have been given 2 SDVs on the date of agreement, date of transfer. You will take as on the date of agreement. Ignore the date of transfer. Ignore the date of transfer. So now I have my SDV also. I have my SDV also. I have my SDV on date of transfer. I have my sale value on the date of transfer. I can find my full value of consideration. I know my transfer expenses, so I can find my net consideration. I know my 2001 data, so I can also find my cost of acquisition. I also have advance forfeiture, which will give me the net cost of acquisition. Cost of improvement is also given in the question, arriving me at my long-term capital gains. Question says compute capital gains, meaning as per new law. Also compute tax liability, meaning as per both provisions. Assuming that the basic exemption limit is fully exhausted, basically no Kaju Katli is happening. This is what the facts of the case is. Yes, keeping these facts in mind, people, I'm going to prepare a answer I'm going to prepare an answer with the format, help, 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 help. I am putting it on the left side, people. My space is less. My full value of consideration as per the format says FMB not given. FMB not given. Do you see FMB? Do you see FMB? No FMB in the question. No FMB in the question. FMB as per valuation officer not given. Therefore, I'll take SDV is 39 lakhs or 30 lakh 50,000, whichever is, but always check for 110% of consideration. My consideration is 30.5. 110% will add another 3.05, which will become 33 something, 33, 34 something. I need 39, which is still higher. Therefore, whichever is number becomes super. Format done. Format done. I am now doing transfer expense. People, transfer expense is 1% of 30,500, giving me 38,69,500. Done. No, done. No. I am coming to cost of acquisition. People, sale happened after 23rd July. After 23rd July, therefore I have to follow no indexation rules. No indexation rules. Rule says FMV on 2001, SDV on 2001, whichever is, compared with cost, whichever is. People, FMV in the question. Read the question. 11.85, 10.7, whichever is lower. 10.7. Cost of acquisition is on the top. 359, whichever is. Therefore 10.7 is the answer. Therefore 10.7 is the answer. Format requires हाँ तो कॉस्ट तो 1979 करेगा ना. एक्चुअल कब का है? एक्चुअल सीओए कितना है? ए 2001 के बाद का है तो सिर्फ एक्चुअल लेना है. 2001 के पहले का है तो इट्स एफएमवी और एसडीवी और एक्चुअल्स. Yes, yes, yes. So it is 1070, people, and the format says in 1070 remove advance forfeiture. I have an advance forfeiture of 1,11,000. So I get 20. अच्छा, removed both, is it? Ma, it is minus of these two. क्या है? 9.59. People, advance forfeiture is removed from cost, so it is 9.49. 9.49 से 38, 69 removes. क्या कर रहे हो? I don't need, no, I need cost of improvement first. Put my cost of improvement. What is my cost of improvement, people? Minus cost of improvement. Question says 3.9 lakhs. 3.9 lakhs. So this is also getting removed. This is also getting removed. So 38,69,500 minus 9.59 minus 3.9 lakhs. 20,500. Do you see any exemptions in the question? Do you see any exemptions in the question? This becomes my yes, yes, yes. This is my capital gains. This is my capital gains. But the question is also asking for tax. So I need to now do tax. So I'm first doing on this number itself, people. This number is my actual number. So it is tax as per new. Tax as per new. My tax as per new is 25,500 at the rate of 12.5%. 3,150. 315063. Yes or no? Yes. Some round of numbers, people. It's okay. Some round of 315063 is my tax as per new. As per new. Cess is anyway going to happen on either of the two. So it's okay. Let it go. Let it go. I want to now do tax as per old. But to do tax as per old, people, I need to first find out my Calculation benefits. Calculation benefits. From my question, people, my net consideration is already given to me. 38,69,500. So my net consideration is 38,69,500. Question says my cost of acquisition is 9.59. 9,59,000. Indexation numbers given to you, people. 1, 2, 3, 4, 5 numbers are given. I will take. People, cost of acquisition is CII in the year of transfer divided by CI in the year of acquisition. In the year of acquisition. So it is 9,59,000 into 363 by 100. Number becomes 8. Okay, 170. 170. This is my indexed cost of acquisition. I also have improvement now. People, improvement formula 3.9 lakhs into same 363 but divided by when did I do I did it in 2000, so therefore I have to take 254. So it is 3,90,000 into 363 by number becomes 557, 362. People, I am removing these two numbers without even taking a guess. I know number is loss. I know number is a loss. Because my number is a loss, my tax on this number is 0. Therefore, whichever is tax becomes 0. My final tax payable is 0 on this. My final tax payable is 0 on this. Question. Loss which I am getting in this, I want to carry forward. I want to set off. I want to use it in the future. Not allowed. Fully not allowed. My income will remain at 25, 20, 200. So that's what they would have done, people. My tax on this is 315,063. My tax as per old will be 0 because I'm getting a loss here. However, the question says the computation is only for determining tax liability. Loss can neither be set off nor be. Yes. One thing which you notice, people, in this question, nowhere have they come and told you have to do old and new. They only said compute tax. Your job to compute old and new. Which is why the format will help people. Yes, we have followed the format. We have got the answer without even breaking our head into things. Yes, keep the format intact. 4 marks, 6 marks or 8 marks in May 25. Straight out answer. That is what you'll get in this exam. Yes or no? Yes. This is your amendment relating to immovable properties of capital gains. Any doubts? Makes sense? Easy. Yes, it takes a bit of time and efforts, people, but definitely you'll get through it because this is the only format which you need to follow. If you follow the format properly, everything will come out properly. Some extra things which may happen in this question which is not in this question is you may get some exemptions. That alone you'll have to play around. Other than exemptions, people, technically everything is an answer here. Clear enough to go? Yes or no? This is your amendment relating to capital gains, more specifically from your immovable properties. That is the amendment in capital gains, people. Apart from capital gains comes the next chapter, which is talking about your distribution of companies. I'm going to hold this once. The last one is your business reorganization. People, no amendments in this. The one thing which I probably want you to change, people, is the mistake I spoke about some time back. When it comes to slump sale, your books will come and show it in green as 24 months. Check. Page number 107. If you notice, slump sale will show in green with 24. Please strike off the 24, make it 36. Please strike off the 24 and make it 36. That's a mistake in my book which has to be rectified because ICI chose to do it that way. Yes, so that is one other thing which you need to delete. So slump sale now has no amendments. Slump sale has the same rules as previous one. Ideally from May exam, it doesn't matter. You are not going to get a slump sale question for sure. Yes, slump sale will not be tested in May exam. You are getting it probably in September or January. So your juniors will take care of it. Yes, you don't have to worry about it. You don't get it in May exam. Yes, so slump sale is not an amendment for you. Last amendment of your syllabus, we are looking at something called as buyback. My gut feeling, you're getting an MCQ question on this, pakka. Yes, we are looking at something called as buyback. Now, for those people who are till January, I would have told you buyback is not important for your exam. Because it was more final level syllabus. You had something called buyback tax back then. buyback, tax back. Then where I said you just have to take your buyback profits, multiply by 20 plus 12 plus 4, you'll get an answer. You will get an answer. That was still last year. That was still last year. Current year provisions have changed. Current year provisions have changed. The provisions have gone a little crazy, people. It's a little stupid provision, one of the most stupider provisions, and therefore favorite for ICA. Yes, yes. The provisions of buyback in the current year now come and tell that going forward, any money which you receive under buyback, going forward, any money which you receive under buyback will be deemed as dividends. Going forward, any money which you receive in buyback will now be deemed as dividends. The moment I say it is dividend for you, it is taxable under the head IFOS. It is taxable under the head IFOS. That is what the rule says. That is what the rule says. So people, Rahul has an asset bought in Reliance. Rahul purchased it for 100 rupees from Reliance. Reliance came back to me and came and said, dear Rahul, I don't want you to be my shareholder anymore. I want to buy back your shares. I want to buy back your shares at, let's say, 12 rupees. At 12 rupees. People, earlier, you would say 12 is my sale value, 10 is my cost, profit is. Now income tax says, forget everything. How much you got? Your dividend is 12 rupees. Your dividend is 12 rupees. No conditions, no nothing. What you got is your dividends. What you got is your dividends. So the whole 12 rupees becomes taxable as, very good. Now I went to income tax department and said, sir, okay, you want to take 12 as dividends, take 12 as dividends. What happened to my 10 rupees? I paid no 10 rupees. What happened to my 10 rupees? Income tax said, nothing, pa. This becomes a loss. This becomes a loss. Take it as your capital loss. Take it as your capital loss to be carried forward for 8 years. To be carried forward for 8 years, which means now income tax says two things you had: sale value, cost value. Sale goes to, cost goes to. That's all is the answer. That's all is the answer. Makes absolutely no sense, but this is what the answer is. This is what the answer is. Yes or no? Yes or no? Yes or no? So what is income tax telling you, people? Whatever buyback profits you get, the full buyback money which you got will be taxable as IFOS, and whatever payment you made for the shares will be taxable as long-term or short-term capital loss. Long-term or short-term capital loss. Now here comes the question. Till last year I came and told you, whenever you have dividends, it will only be called as dividends to the extent the company has accumulated profits. Yes, when we remember the dividends chapter, people, 5 dividends we discussed. Every time we spoke about dividends, I told you dividends will only be called as dividends to the extent the company has accumulated profits. For this one, there is no condition. For this one, there is no condition. Income tax says even if the company has losses, whatever money you got will be called as dividends. I'm like, sir, company has loss. Where is dividends? He's like, no, that I don't care. You got money, therefore it is. That's what the answer is. That's what the answer is. So people, what is happening when it comes to buyback? Income tax says two elements are there: full value of consideration, cost of acquisition. Full value of consideration, cost of acquisition. Take full value of consideration tax as dividends under IFOS. Whatever cost of acquisition you have, claim as loss under CG. Claim as loss under CG. Yes or no? Yes or no? Yes or no? Ignore any expenses. Take a minute. Ignore any expenses. मैं भी भूल गया क्या लिखने वाला था मैं. Correct. Thank you. Bol. I'm giving you that question. I had that question in mind. Give me 2 minutes. Yes, yes. This is what the provisions are, people. This is what the provisions are. Any doubts on the provisions? Any doubts on the provisions? No, 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 no. Take an illustration. I don't know what number it is. Illustration X, जो भी तुम्हारे मूड में. Yes. Yes, so I'm coming and saying, people, there is a person called CA Mega who has brought shares of X Limited at a price of rupees 15 when the face value of the share is rupees 10. When the face value of share is rupees 10. The purchase happened in 2016. The purchase happened in 2016. X Limited decided to buy back shares at a price of rupees 12 at a price of rupees 12, where the company has a reported reserve and surplus of rupees 20,000. The company has a reported reserve and surplus of rupees 20,000. Assume Mega has 60,000 shares in the company. Identify the tax implications. Identify the tax implications. Yes, this is what the question says, people. Now, before you start, let's first figure out what is relevant and what is not relevant. Let's first answer that question. People, I'm seeing multiple numbers. First number I see on the screen is 15 rupees. This is the price at which I bought the shares. This is my cost of acquisition. Relevant, not relevant? Relevant. This is the price which I bought it. This is the price at which I bought it. So this is relevant for me. So I'm keeping this information in mind. This 15 rupees at which I bought was actually at a face value of 10 rupees. Relevant, not relevant? Not relevant. I don't care at what price company has it. I'm only bothered about at what price I bought it. Yes, company has decided to buy the shares from me at a price of rupees 12. This is the money which the company is going to give me. This is my. Therefore, this is relevant. Agreed, not agreed? Agreed, not agreed? Where the company has a reported reserve and surplus of 20,000. Not relevant. I don't care how much company has. Even if the company has losses, I don't care. Even if the company has 5 crores also, I don't care. I'm only bothered about what I got, what I paid, what I got and what I paid. Assume Mega has 60,000 shares in the company, which means now I know how much money I will get and how much money I paid. Notice I am having full value of consideration as 60,000 into, which becomes to be taxed as dividends under IFOS. To be taxed as dividends under IFOS. On the contrary, I have cost of acquisition of 60,000 into 15 rupees, 9 lakhs, to be reported as very good, to be reported as long-term capital. People, I purchased it in 2016. I am buying back in 2024. There is 8 years ka gap. Period of holding is 12 months. This is listed shares. Period of holding is 12 months, and therefore this is the long-term capital loss to be set off against a to be set off against long-term capital gains in 8 assessment years. Yes, now if you technically notice, people, I actually made a loss on day one itself, because I bought for 15, I sold for 12, so I actually made a loss. I should have got a 3 rupees ka loss from department, but here is department coming and saying forget loss and everything. What money you got is taxable this year. Whatever money you got is taxable this year. Whatever you paid, claim it next year's. Claim it next year's, if at all you are able to claim in the next years. If at all you're able to claim in the next years. In the next 8 years, if you're not having capital gains, This is permanently gone then. This is permanently gone there. Absolutely makes no sense. But when income tax talks about things, there is never sense to it. Yes, this is your provisions on buyback dividends. This is your provisions on buyback dividends. A question expected in exam this year. A question expected in exam this year. You can get it in any format, people, whether it can come in compulsory question, MCQ question, anything can come. The question will simply come and say there is a person who has received money against buyback from the company, where the company has no losses, or the company has losses, or the company only has this much profits. It doesn't matter. Take the money, show it as Ifos income, show it as Ifos income, and then corresponding whatever cost you have, you can claim it as deduction. You can claim it as deduction. That is what would happen. That is what would happen. Yes, 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 yes. This is your amendment relating to buyback laws. And finally, the end of what is called as capital gains. End of what is called as capital gains. These are all the amendments which you need to know for your upcoming exams, along with whatever you already know. Yes, not very heavy amendments, people, but still good amount of amendments. Enough good amount of amendments that can be tested. So even if things go south, these amendments itself will carry at least 10 to 12 marks. Yes, which itself is good enough to go, because capital gains itself will carry 8 marks. So good amount of capital gains, 2-3 MCQ questions on buyback and this and all that. Easily 10 to 12 marks will come from here itself. 50 में से 10 to 12 इधर ही आ गया, matter over. Yes or no? Yes, that is the kind of weightage these amendments and all have. The only problem is sometimes ICI goes cranky. There'll be one paper where there'll be no amendments, and there'll be this one paper where only amendments. Yes, so you never know what is going to happen. Yes, with ICI you can't take that chance. I at least had this thing in the mind that ICI now has a template format, this is what will happen, and then January they came and screwed the template itself. Yes, and then January they came and said, you know a template, there is no template itself. Yes, so with ICI now it's become very unpredictable. Yes, so you prepare for the worst. That is what the whole idea is. But yes, people, amendments important at any appropriate stages, whether it comes or not. You will not get all the 5 to 10 amendments in one paper itself, but you'll certainly get at least 2 of those. So any of those amendments can really carry good marks for you, and you should be able to answer this off. Yes. Any doubts on the amendments, people? Are we clear on this? Everything is safe enough? Great. That is what is from the amendments perspective, people. Parisha, any doubts on this?